frankly, a labor market that's allowed this kind of job creation without an increase in wages is because of immigration. And you can say whatever you want in the political sphere, but that has been one of the main driving thoughts of a lot of different research pieces. So here's the question. If Donald Trump is serious about curtailing and possibly even deporting certain people who have come to this country, what does that do to the labor market? What does that do to the potential productivity? Putting that aside, what does it do with tariffs? And then this ultimate question of, is the former president going to be checked by a market that might sell off in response to that? A lot of uncertainty.
And somewhere in between, somehow, the chairman of the Federal Reserve has got to set monetary policy for everything you just described. There's a lot of work to do. Equity futures right now on the S&P positive by 0.2%. Bond yields shifting higher worldwide, actually, this morning, following the sell-off on Friday in the Treasury market. Yields up just a little bit this morning by a single basis point of 440.99. In the FX market, the euro stronger, Lisa, after round one of the elections in France.
Evidently, Marine Le Pen didn't win by as much as some people previously thought. And the bigger issue to me is this idea that there could be some sort of coalition, loose kind of allegiance between the left party, the progressive wing, and Emmanuel Macron's party that could potentially limit the control that Marine Le Pen has after the second round next weekend.
Spreads narrower. The euro stronger, French equities rallying. That's just Monday morning. We'll see what the week brings. Elsewhere, coming up on this program, we'll catch up with David Kelly of JP Morgan as stocks kick off the second half of the year. Ed Mills of Raymond James as Biden loyalists defend his campaign. And Krishna Mamani of Lafayette College on the bond market risks of another Trump presidency. We begin with our top story. Stocks looking to keep up momentum in the second half after gaining almost 15% this year. JP Morgan's David Kelly writing this. Neither consumers nor investors are behaving as if they are scared. Investors have pushed the S&P 500 to an all-time record high 33 times already this year, while consumers have maintained a personal savings rate of 3.6%. David is with us around a table. David, good morning to you.
Good morning.
A lot of people coming on the program talking up a consumer slowdown, cracks in the labor market. Why shouldn't we be fearful of that?
I don't think we should be fearful right now. What we're seeing is a small downshift in growth. We have a problem at the lower and middle income consumers. And if you look at consumer non-durable spending, things like food and clothing, just the basics, that was actually lower in May than it was in December. So we can see that slow down. But at the same time, we've seen tremendous wealth gains. And we've also seen tremendous wealth gains. We've seen a lot of payroll job growth, a lot of wage income growth. So as I look at the consumer spending will grow more slowly, somewhere in the 1.5% range going forward for the rest of this year, as opposed to 2% plus. But that's still enough. And so I think all that's happening here is the economy is slowing down to a little under 2 in terms of growth, a little over 2 in terms of inflation, but it's still pretty good.
So slowing, not slow. Can you tell me the difference between normalization and something more sinister? What would that look like? What would change your mind ultimately?
Well, this is a very stable sort of. It's kind of like this very stable machine that sort of just pumps out twos in terms of growth and inflation. What could change that is something will change it. A, a shock, or B, a big policy change. We were just talking about. I do think that what happened on Thursday meaningfully increases the likelihood of a Republican sweep in November. If Joe Biden is the candidate, it's quite possible a lot of independents will stay at home, and so Republicans will sweep. Now, if they sweep, if you take Donald Trump at his word, you've got much higher tariffs. And now tariffs are a elixir for stagflation. Tariffs slow growth and push up inflation at the same time. If you took him at his word on immigration, the economy would come to a halt because of deportation of unregistered immigrants or illegal immigrants. So, but I'm not sure if we can take him at his word. I think history suggests that perhaps it would be optimistic, or not optimistic, but it would be foolish to take him at his word in this stuff. But still, it's something to think about. I mean, some policy shock could absolutely tip this economy into recession.
Hold on a second. John said that basically Friday was the first day of this election cycle, at least for markets. How much do you actually rearrange what you think about how to position in markets as a response to this idea that you think that there is a greater likelihood of a Republican sweep?
It does make a difference. I mean, let me give you one example. The 2017 tax cuts. If Joe Biden is reelected, then some of those tax cuts will be extended beyond 25, but not all of them. If Donald Trump is elected, I expect that whole thing to go through. And if you add that to what the CBO is already looking at in terms of the growth in the debt as a share of GDP, by the early 2030s is going to be about 135% as opposed to 122%. So you're going to have significantly more debt if we extend all these tax cuts, and that means a higher level of long-term interest rates.
So in other words, are you more bearish on long-term bonds right now than you were, say, Thursday morning?
Yes, I think it would be a rational thing to be that way. Yes.
Let's build on that a little bit more. If that's how you've responded to Thursday night, how should Chairman Powell respond to this? Because surely he has to factor this into the equations for monetary policy looking out 12 months and beyond.
No, I think that to be honest, I think that's too cute. I think he should make policy for the economy that he's got, because I think we can change our views a little bit here, but he always sort of takes monetary policy as a given. Right now, markets are pricing in about a 70% shot of a rate cut in September, and I think that still makes sense, because what I'm saying earlier on about a downshift in growth is real. That's what we've got right now. What happens after the election does depend on how policies are implemented, but he can't really make policy based on how the election might turn out and then what a particular configuration Washington might mean for policy. It was just too far down the road.
Can we think back to 2017 when we got those tax cuts from the Trump presidency at the time, how the chairman of the Federal Reserve at that point, how the Federal Reserve adapted, given they had to wait for the policy, they had to wait for it to be delivered, and they had to wait and see what ultimately it would do to the economy?
Well, they were also getting a lot of incoming from the administration, which is very unusual. But the administration was trying to bully them into easy monetary policy, and we did actually end up in 2019 with very easy monetary policy, given an economy in which inflation was actually beginning to build. So, I mean, I think there's a real question again: if Donald Trump is elected and he has a Republican Senate, does he simply does he want to replace Chairman Powell? And it's I'm not a psychologist here. It's a real question what the priorities would be for Donald Trump if he found himself in the White House again.
There's another question on top of all of this, which is just how much leverage the next president's going to have with respect to pushing different levers, given the economic fragilities that we started this conversation talking about. We began by talking about the second quarter and whether the idea of the underperformance of the equal weight, the underperformance of the Russell 2000 was a sign, almost a canary in the coal mine, of some kind of weakness under the hood that is pervasive and that really is on a tipping point. Do you believe that to be the case? What would you have to see this week in the data coming out to give you that kind of sense?
No, I don't think so. I mean, I don't expect to see very rational signals coming out of the markets, to be honest. I mean, to me, when I look at the concentration in the U.S. equity market, it speaks to the euphoria at the top, not rational thought at the bottom. I mean, I think that's what's going on. And if you look at the U.S. share of global equity markets, it's the same thing. The U.S. should not be 65% of global stock market cap. So when I see these things in markets, it doesn't tell me that markets are rationally discounting an oncoming economic slowdown. What it tells me is that people are simply doubling down on existing bets because they think this party's going to keep going.
Just to sort of put this all together, do you believe that some people are investing in big tech simply because they have all of this uncertainty, including the election coming down the pike, including the sort of uncertainty around the economy, that the one haven has been these tech names that keeps delivering, and that if we get certainty, that could actually encourage people to leave those names and go elsewhere?
We were talking earlier on about our granddaughter, and we took her out to the park recently to blow, and she was blowing bubbles for the first time, but it didn't work very well because it was really windy and all the bubbles were bursting. But if you had a really calm day, bubbles grow great. And the problem is we've got a really calm economy that just grows bubbles. What's happening is people look at the economy and say, well, that's fine. And then they double down on the bet on mega cap tech. They double down on the bet on the US. None of these bets are going to get reversed until something shocks the system. And right now, the economic climate is just too calm.
We'll see if November provides that shock. David Kelly, it's good to see you. Thank you, sir. David Kelly at JP Morgan. You just heard it again there, Lisa. Just on the margin there, just the changes that people are starting to think of after Thursday night.
It sounds like you were correct by saying that Friday was kind of day one of this election cycle and that people were rethinking a playbook for Donald Trump to win the election.
At least the first trading day, that's for sure. This is the first trading day of Q3, and we've got equity futures up by about 0.2%. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Sticking with politics, President Biden is asking donors to stay following last week's disastrous debate. Biden told the crowd at a Hamptons fundraiser that he did lose a step on the debate stage and vowed to work harder. He added that he wouldn't be running if he didn't believe he could win. Biden's Thursday night performance does risk his ability to fundraise as much as Trump, to which the campaign has downplayed those concerns, saying it raised $27 million between debate day and Friday evening. Shares of Chewy surging more than 15.5% in the pre-market. Meme stock investor Keith Gill, aka Roaring Kitty, disclosed a 6.6 passive stake in the online pet product retailer. That's about $255 million. Both Chewy and Petco had briefly soared last week after Gill posted just a cartoon image of a dog on X. Now, the founder of Chewy, Ryan Cohen, had also been heavily involved in the meme trading frenzy, buying up large sums of GameStop until eventually becoming its CEO last year. Now, people familiar with the matter say that the DOJ has told Boeing that it's charging the plane maker with fraud in connection with 2 fatal crashes involving the 737 MAX planes. That leaves the company to choose between pleading guilty or taking the risk of going to trial. The company has until the end of the week to make that decision. The DOJ has also told Boeing it will need to pay a fine and hire a corporate monitor. And that's your brief, John.
Danny, thank you. We'll catch up with Danny again in about 30 minutes' time. Up next on the program, President Biden's path forward.
He should stay in this race. He should demonstrate it going forward, his capacity to lead the country.
A rallying cry around the sitting president. That conversation up next, live from New York City this morning. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The equity market just about positive here by, let's call it 0.25% on the S&P 500. In the bond market, Treasuries a little bit lower, yields a little bit higher by a single basis point on a 10-year, 440.99. Lots of talk about round one of the French elections. The euro stronger by a third of 1%, 107.48. Under surveillance this morning, President Biden's path forward.
Joe Biden is the nominee, and I'm going to do everything I can to make sure we elect Joe Biden and Kamala Harris come November. He should stay in this race. He should demonstrate it going forward, his capacity to lead the country.
Joe Biden is not going to take himself out of this race, nor should he.
It's the latest this morning. President Biden's supporters defending his campaign after last week's disappointing debate performance. Concerns about Biden's candidacy are growing. According to a new poll from CBS YouGov, only 28% of registered voters think Biden should be running. Ed Mills of Raymond James writing this. There is concern among Democrats that Biden will lose. But Team Biden is trying to argue that polling suggests he's still the best person to beat former President Donald Trump. Ed Mills joins us now for more. Ed, the question of Friday morning, Thursday night, we're still asking this Monday morning, how does Thursday evening change this race?
You know, it was a game changer. And what I've been looking at here, John, is that, you know, in D.C., people with power like to keep power. And that's on a collision course right now. It is very clear that Joe Biden and his team want him to be the nominee. He has enough delegates to become nominee. And so if he stays in this race, he will be the nominee. However, what I was talking about there is that other Democrats are really concerned about losing to Donald Trump and are really concerned about losing the House of Representatives in the Senate majority. If there were to be a Republican sweep, huge policy and market implications. And so the people who have power in Congress, those other elected Democrats, are really concerned that Donald Trump not only could be reelected, but there is an increasing likelihood of that Republican sweep. And so that collision course is going to play itself out throughout this month.
Ed, let's pick up on your point in that quote that I shared, that the president and the team around him are trying to argue that he's still the best person to beat the former president, Donald Trump. Does the polling still back that up?
The polling prior to the debate absolutely does. We're starting to get some polls out, some that didn't show that much of a change. But if the polling situation for President Biden starts to deteriorate, look for those voices to grow louder. One thing I say about D.C. very frequently is things are impossible right up until the moment's inevitable. So if we still get more polling out there that suggests that he could beat Donald Trump, then the Biden team is going to keep him in this race. But if his polling position deteriorates, that's where that swell from other elected Democrats come in and try to find him a graceful exit.
Ed, some people are calling him Joe Bader Ginsburg. There's clearly a real anxiety under the hood here about what happens if he stays in beyond that. Is there a deadline where he cannot choose somebody else, where he cannot step down because the ballots are printed, because the election has just gotten too far underway?
So I think a lot of people are looking at the deadline of the convention. I'm looking at an earlier deadline, Lisa, because I am looking at the fact that Ohio, you need to have a virtual convention to select the nominee, to have a presidential candidate for Democrats on that ballot. And if there's no Democratic candidate on the ballot in Ohio, not only do you give away those electoral college votes that more likely than not are going to former President Trump, but there is a key Senate seat that is key to keeping the majority in the Senate for Democrats. So that deadline's August 7th. Before the convention, after the convention, if there is an emergency, you can have a meeting of the executive committee of the Democratic National Committee to select a new candidate. But because this is so out in front now, that gets much more difficult later on. This is a democracy. The people are supposed to have a choice in who the candidates for president are.
Ed, you started out by saying that it really was a game changer last week, and that certainly you're seeing that in a lot of Wall Street notes where people are saying, well, we have to game out what a Donald Trump presidency number 2 would look like in terms of the deficit, in terms of growth. Do you agree that there will be some sort of check on any sort of Republican sweep in the policies that ensue by a market that could potentially get spooked, whether it's yields going up significantly or whether it's certain more immigration-sensitive sectors getting hit harder in the stock market?
So yeah, I was in Europe meeting with clients all last week. And one of the first questions was, is the policies that Donald Trump would be pursuing, are they inflationary? Would that be the second wave of inflation? When we look at almost $5 trillion worth of tax cuts, we look at an immigration policy that could impact labor force. There might be a lot of popular support for this, but then you add on tariffs, an immediate trade fight to restart with China, a trade fight with Europe. Obviously, the clients in Europe were very concerned with that. But that's against the reality of there's sometimes what you want to do in life and what you can do in life. And there's a lot of questions out there. Does the United States get a UK Liz Truss moment where you want to extend out $4.6 trillion worth of tax cuts, but the bond market does not let you do that. And so people that I'm talking to and all the clients at Raymond James are preparing for some of those contingencies if there were to be a spike in yield after this election.
Ed, forgive me for being the guy who's about to change the subject, but I'm about to change the subject. What got lost completely going into the weekend with the decisions from the Supreme Court? Can you walk us through just what you think we should be focusing on and how much has changed?
Yeah, so I think the other game changer from last week was the Supreme Court decision on Chevron deference. You know, it's a thing that gets batted around, but the Chevron deference is what has allowed regulators here in the United States to basically decide what Congress made as a law. All the ambiguity, kind of the deference went to the regulator, that's gone. And so going forward, the deference is going to be to the business community very frequently and put pressure on Congress to clarify law. And so tech regulation, bank regulation, healthcare regulation, energy regulation, all of the work that the EPA does is now in doubt going forward. That's a fundamental shift to the regulatory state that has existed here in the United States, something that was the Friday news dump of all Friday news coming from the Supreme Court. So, John, thank you for changing the subject, because from a market perspective, if we look back to this last week, we probably will point to the Chevron change at the Supreme Court as the biggest long-term market mover.
Can we connect the two issues? Do you think that that decision would pour gasoline over any Trump agenda?
Absolutely. If you look at potential deregulation, it's not only putting gasoline on a potential Trump or Republican agenda, it is also permanently impairing the ability of Democrats when they pass a new law in future governments for them to go and put forward new regulations. We think about tech. A lot of the tech regulations are on laws that pass before certain technology exists. So can the regulator regulate something that Congress didn't contemplate? That's so much in question right now. So either agenda, the regulatory state in this country has been ratcheted back because of that Supreme Court decision.
Absolutely fascinating. Ed Mills of Raymond James. Ed, thank you, sir. As always, Lisa, I know you've got thoughts.
Well, this to me actually was one of the biggest shifts, and you were so right to bring this up, given the fact that this basically undercuts regulators' ability to create rules for the energy industry, for the healthcare industry, for the insurance industry. Does this give a boost to those industries? Does this really undercut existing proposals? How much ongoing litigation will there be? To the tech point, that's fascinating at a time where people are really having a great deal of anxiety about how we're going to potentially regulate AI.
So much going on down in DC over the last week or so, that's for sure. Coming up on this program, we'll turn to Tesla, preparing to report second quarter deliveries. That conversation is just around the corner as we kick off Q3 with equities positive by 0.25% on the S&P. And Lisa, guest after guest, just starting to take a Trump presidency that much more seriously after Thursday night.
You can say whichever you want about the predicted polls and the idea of what we see out there, but it does seem like there is a shifting pendulum away from Joe Biden in the wake of his performance at that debate, and it is not something that people can ignore in the market.
Will this Treasury market regulate any particular ambitions of any particular government?
To me, that's one of the key questions. People believe that the ghost of the Liz Truss moment is going to come over and rule this market. Will it?
Yields up this morning by a couple of basis points. Live from New York City, this is Bloomberg.
multi-trillion-dollar industry. There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocks are positive on the S&P, on the Nasdaq across the board actually. On S&P 500 futures this morning, positive by 0.2%. Similar move on the Nasdaq 100 on the month. Let's go through the scores for the month of June. S&P 500 up about 3.5%. Nasdaq up by more than 6. Equal weight S&P down on the month. That underperformance, Lisa, on the month, on the quarter, humongous.
And it's one of the biggest divergences that we've seen going back to the 1990s between equal weight and the market weight. What we can see right now is this question of how long can the Magnificent Seven continue to generate these kinds of returns. Take a look at this. 17% gains for the Magnificent Seven in the quarter. That really compares to NVIDIA with a 37% increase. These have been the powerhouses at a time where their revenue is not quite keeping pace, and that's something that's making certainly Torsten stock a little bit queasy.
It wasn't always this way this year. You remember at the start of the year we were talking about the Mag 7 breaking down. The fabulous one, whatever you want to call it, just being NVIDIA. Apple started to struggle. Then that performance story just started to shift. Do you remember for a moment, Alphabet was like done and dusted. It got everything wrong with AI, left for dead. Then Alphabet started to pick up too.
So there was this belief that they would be the most interest rate sensitive stocks. Remember that for a hot second, that they were going to be the ones that were curtailed if the Fed wasn't able to cut rates. That's been turned on its head as they're sort of independent of interest rates, and perversely, their cash piles actually give them a benefit from higher rates because they're generating an incredible amount of interest income from that cash. There is this issue of what could potentially sink these stocks, and it would have to be some sort of broad-based weakness. That, according to Mike Wilson, that maybe on the edges we're starting to see. It's unclear though, and this is the reason why the week ahead is going to be important.
That's the stock market. Let's switch on the board and turn the page and get to the bond market. 2-year, 10-year, 30-year, looking a little something like this. Basis point higher on the 10-year to 441.18, up 2 basis points. On a 30-year, 457.55. At the front end of the yield curve, the 2-year at about 475.77. You talked about the week ahead, Lisa. We'll get into the details of what days bring what. But over the last month or so, just the labour market cracks, just starting to feed that conversation. And maybe this Federal Reserve chat of the last few weeks feels a bit stale.
And that's the reason why people think that Jay Powell, coming out tomorrow at the Sintra conference of the ECB in Portugal, is going to be more instructive than, say, the meeting minutes. Because when you take a look at the meeting minutes that come out from the FOMC's last meeting, to your point, they are stale. And it speaks to a very different tone that we've heard in the likes of Mary Daly and perhaps Fed Chair Powell, recognizing some of this weakness more than emphasizing the inflation rate.
The dollar coming off the back of 4 weeks of dollar strength. The euro showing a bit of strength this morning. Just a touch. We're up by 1/3 against the US dollar. Stronger euro, 107.47 off the back of the results over the weekend in France. We'll talk about those results in just a moment. Under surveillance this morning, traders preparing for a busy week of economic data and a lot more Fed speak. US PMIs and Fed minutes coming before the latest payrolls report due out on Friday. And we'll hear from Fed Chair Jay Powell tomorrow. Wednesday is super, super busy. For a good reason, because we're all off on Thursday, at least most of us are. Wednesday means you'll get jobless claims, and I think jobless claims for a lot of people has been the one to watch.
I would completely agree with that. It's just slowly been creeping higher, and even though you've seen sort of a stability in terms of the initial jobless claims, continuing claims have crept that much higher. There's a feeling that there has been this steady weakening at a time where it's very unusual to see a linear move. We keep talking about this. Everyone's saying you're just repeating yourself. To me, it'll be key to see whether we see a breakdown in that in tandem with JOLTS, job openings coming out, and the ISM factors. Remember when we used to say, tertiary data, and then it comes out with a surprise to the downside, and suddenly people are wringing their hands and saying the sky is falling. We get ISM manufacturing today, and on Wednesday we get ISM services. If you have a 1-2 punch there, could that overwhelm some of the other data as possibly being a forward indicator?
2 economists this morning that I really respect, and you do too, MKM Partners, we've got the likes of Mike Data. JP Morgan, we've got the likes of David Kelly. Two completely different views on where we're going. Mike Data's talking about this weakening, which the Fed has got to respond to. And David Kelly's talking about normalization. We're slowing, but we're not slow. And it's okay where things are right now in the economy.
The tension to me, and we've talked about this extensively, is that there is a cohort of individuals, of households, and of companies that are on the higher income level that are doing just fine, that are doing great, that are actually able to spend in significant portions that are upholding the overall general economic activity. And then you have lower income households, more leveraged companies that are really struggling, and we see that in all of the data. How do you pair those two ideas? You can make an argument for a resilient, strong economy. You can make an argument for an economy that's falling off a cliff. Where does it come together in terms of Fed policy? And frankly, you can skew it however way you want. It is hard for me to understand how you put these two things together for a policymaker.
That's some of the week ahead for you. Let's talk about the last weekend. French President Emmanuel Macron's centrist alliance and his left-wing rivals are weighing whether to pull candidates from the second round of the election. This comes after Marine Le Pen's national rally dominated the first round of voting. This morning, let's bring up the spread. We can compare the French 10-year to the German 10-year. So you've got German 10-year yields higher this morning by 6 basis points. The French 10-year up only by a couple of basis points. The spread narrowed. You can all see that based on the numbers. So the spread is in and around 75 to 80 basis points, okay? Before this mess, it was about 40. You asked the right question. Whatever happens over the next week or so, do we go back to where we were before? And the answer we got earlier from TD was no.
And that's because you have this inherent risk that is implied by the groundswell of support from Marine Le Pen. How that factors out, though, is going to be interesting, and whether French is sort of a harbinger of what's to come in other governments, including in Germany, is a really important question at a time where people are seeing the same types of groundswells in populist sentiment elsewhere. And I think that's ultimately what we have to grapple with.
What's your response to the market reaction this morning off the back of the results over the weekend? What do you make of that?
Wishful thinking and people who are hoping for an opportunity to get in and get a discount. Didn't we hear that already? A lot of people saying that they were looking to opportunistically collect some extra basis points there.
Just not as good as it could have been for Le Pen. I think that's my only reaction to it. All of this sort of 3D-dimensional chess that people are playing about certain candidates pulling out, certain candidates kind of offering their support to another one to make sure that Marine Le Pen doesn't get in. The governance issues in France are not going to go away. They're going to get worse.
There was a quote by a former ambassador to France in the United States basically saying that the French nightmare is just beginning. And I think that that's a good way to characterize this.
I think a lot of people on board with that sentiment. Here's our next story. Tesla. Investors bracing for a crucial 6-week stretch. The company set to report second quarter deliveries tomorrow, ahead of earnings later this month, and its robo-taxi event in August. The stock is up in a pre-market by about 1.8%. Bloomberg's Craig Trudell joins us now for more. Craig, let's go through that 6-week stretch. What are you and the team focused on over the next 1 month, 2 months?
Well, it's pretty remarkable to see the stock moving the way it has just in the last week, 2 weeks, because we've seen just consistently analysts coming out and pairing their forecasts for vehicle deliveries for the second quarter. So the expectation pretty universally is that the company will have its second year-over-year decline. The last time that they had back-to-back quarters where they were down was in 2012 when they were phasing out the Roadster, their first vehicle ever. So you really have to go back a long ways, to find the last time that this growth company wasn't growing. And in spite of that trend, you're seeing sort of more emphasis, more focus on that August 8th date. The idea that Musk is going to sort of pull a rabbit out of a hat and unveil a robo-taxi, which I think there's, of course, reason to be, bullish on the business plan there, the prospects for that business, but actually executing it has been another matter for every company that's tried to bring one of those to market.
Greg, give us some more color on that. August 8th has been circled on the calendar since early April. This has been the carrot over the stock ever since, that we'll get this big announcement. Where is the bar? Where are our expectations, and how much caution should we have?
I think that is the sort of big question here, because whether or not you can bring out a robo-taxi that is able to generate any revenue, any meaningful revenue anytime soon is really going to be crucial, because you can put a vehicle on a stage for people, get people excited about something new, potentially assuage some concerns about the idea that you're not going to have a cheaper model to offer for some time. There's been a lot of concern about whether or not this robo-taxi has, taken precedence over, a Model 2, as people refer to it. If you can pair, a sort of, years out prospect with, a more here and now cheaper vehicle, I think that is what the street would generally like to hear from Elon Musk at this point.
We haven't heard that much from Elon Musk in terms of his traditional role as a lightning rod for a host of different things. Is that by design, or is that just because he's been so busy with some of the issues that he's been facing, particularly in Tesla?
I mean, he's posting on X, tens of times a day. I do think that, maybe the number of them that have made headlines like we got used to for a stretch maybe has dissipated somewhat, but he's weighing in on all sorts of topics from surprising stances on climate change over the weekend and sort of downplaying the extent to which there's a crisis, which has been something fairly consistent lately and very contrary to what people were used to hearing from Musk for years. So I don't think he's necessarily shed his lightning rod status. It may just be the case that we're all a little bit tired of this at this point.
Well, I guess the logical question following that is, how much does this basically create sort of less noise around Elon Musk that has both supported and also created volatility in the Tesla stock?
I mean, I think to the extent that he can, stop stepping in it, essentially, I think it's for the best for the company. There was real concern about, whether or not his compensation package would be reapproved, and whether or not, if that vote did not go his way, would he walk? And I think there were, some folks who were sort of the view that, while that is an awful lot of money on the table there, he also, is still the biggest shareholder in this company. Do you really need to give him, $56 billion worth of stock options to keep him, motivated? Maybe not. And there are, some real questions about, just how much that was more of a symbolic vote than it is actually, of legal merit. And that will be another really important thing to watch in the coming weeks is, the Delaware Chancery Court and their, determination in terms of, what that vote meant, if anything, and where that fight goes next.
Craig, we've got a lot to talk about over the next 6 weeks. Looking forward to doing it with you. Craig down there of Bloomberg out of London. Their stock is up by 1.85% in the pre-market. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Morgan Stanley is ending bonus caps for its bankers who live in London. It's an ongoing shift in the UK towards paychecks that look more like the bonus-heavy ones in New York. Morgan Stanley saying in a filing that it is replacing the current restriction with a, quote, appropriate internal bonus cap. The bank says it continues to pay competitively and rewards strong performance as it joins JP Morgan and Goldman Sachs to implement the new pay structures. Big tech companies are looking towards nuclear energy to power the next generation of data centers needed to support AI. Amazon is moving towards a deal with Constellation Energy, which is the U.S.'s largest owner of nuclear power plants, that according to a report from the Journal. The deal would support AWS, its signature cloud product. Amazon had also purchased a nuclear data center in Pennsylvania back in March. And the numbers keep coming in strong for Pixar's Inside Out 2. The movie's only been out for 3 weeks, but it's pulled in nearly $470 million in North America and well over $500 million internationally. That pushes its total globally past $1 billion. It's the first film of the year to reach that milestone, and doing so in just 19 days is a new record for an animated film. And that's your Bloomberg Brief, John.
Those pictures actually made Bramo smile. Danny, thanks for that. What's that about? You watched this movie?
I did, actually. Did you read there was an article about how Barbie and Inside Out 2 have two completely different messages?
Go on.
That Barbie basically is saying that it's the outside world that's creating problems, and Inside Out 2 saying it's basically your inside world, your own personal anxiety that's creating the problems. It was just sort of interesting. I highly recommend Inside Out 2. I thought it was
therapy for adults.
100%, actually.
Yeah, for kids too.
I mean, it's basically, post-pandemic, everyone's overly anxious, and so they made anxiety the main character.
You in the Barbie camp or the Inside Out camp?
Do you think that I'm more in the... What do you think, John? Do you think I'm more in the anxiety camp?
Up next on the program. Best way out of that. Up next on the program. Beginning to price a Trump win.
If it is Trump, We're going to have a hawkish foreign policy, more protectionist. All of that is interest rate upward mobility.
That conversation just around the corner. Live from New York, this is Bloomberg.
The top names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that, moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Therapy in the commercial break with Bramo. Always great. Equities on the S&P positive by 0.25%. Yields on the 10-year Treasury up by just a single basis point. A little bit less now. 440 on a 10-year. Under surveillance this morning, beginning to price a Trump win.
If it is Trump, we're going to have a hawkish foreign policy, a more protectionist. If it's a Republican sweep, which it very well could be, the extension of the Trump tax cuts, all of that is interest rate upward mobility, and I think we will see some of that. On the other hand, if we get more of this economic slowdown, that at least for a brief time could work in the other direction.
Here's the latest. Investors bracing for the chance of a second Trump term following last week's debate. Krishna Mamani of Lafayette College writing this. The bigger risk for the bond market is the policy risks of a Trump administration. Tariffs, tax cuts, immigration, and deregulation. That adds a lot of volatility in that the outcomes can be inflationary in the short term and growth depressing in the long term. Krishna is with us around the table. Krishna, good morning.
Morning.
Do you really think it's now the time to start thinking about this a little bit more seriously after Thursday night?
Again, as an investor, perhaps it's a bit early, but you can't really ignore what happened on Thursday. And therefore, since the probabilities have gone up, and I think if that wasn't the case on Friday after the PCE, rates wouldn't have been going up. So we are incrementally moving that way. Are we there fully? Not fully just yet.
Your view, inflationary in the short run, growth depressing in the long run. Just walk us through that.
Well, so I think certain policies, such as renewal of tax cuts and tariffs, kind of curtailment of immigration and deregulation, all of those things end up being somewhat inflationary. But it is also quite possible, as it happened in the last go-around, that these tariff policies after the initial inflationary quick rise in inflation end up being growth depressing in the long run. Because I think if those tariffs are really substantial, the impact of that both on consumption and overall growth is going to be meaningful.
This type of outcome you wrote is not something that we have faced since COVID. It may end up being a regime changer. What is the market play to that regime changer?
Well, so the market play to that regime change is it'll cause tremendous amount of volatility as people try to figure it out. And if it ends up being growth depressing, as the likelihood is not insignificant, I think overall probably the year of the bond that we have been looking for so long, which never arrived, may arrive sometime in late 25 if the outcome is what it is.
The year of the bond, meaning that you think that there will be a huge rally in long-term bonds.
Eventually, there will be a huge rally as growth, people become far more concerned about growth than they are at the moment.
We're getting quite cute here, but are we saying short-term sell-off?
Yes.
Long-term buy?
Yes.
Tons of volatility in between.
Bonds. Again, it depends. It's being cute because it's very unclear as to what exact policies would be implemented. But I think simply thinking it in terms of inflationary pressures is probably not the right take. That is, it may end up being growth depressing, and that may have bigger impact on long bonds than it is having today.
A lot of people are extremely fearful of Trump Volume 1. Mm-hmm. And after about 5 minutes in November of 2016, they changed their mind. What's different about the backdrop now versus then?
I think that the fact that we had one administration before. At that time, there was some confusion as to how it'll actually play out, and we kind of accepted that there may be really good policy outcomes. If tariffs are the front of the agenda, I think it's very difficult to see how that ends up being very growth supportive in the long run.
There is this belief underpinning a lot of the commentary we've gotten, which is essentially the ghost of the Liz Truss moment. Comes in and haunts all of these governments and says, you behave. Otherwise, the market's going to push back and it's going to say, absolutely not. And a lot of these politicians will listen to that, whether it's over in France or whether it's in the United States, if Donald Trump gets reelected with a full Republican sweep. Do you buy that line of thought?
Well, I think it's entirely possible, but I think whether that is a high likelihood outcome, I'm not so sure. Again, I'm not a political commentator, but I think for that you will need the Congress to be in a much better or at a different place than what it is right now and what it is looking like it'll be come November.
So how much do you kind of have to be a political commentator at this point? How much do you kind of have to rearrange and hedge versus different political outcomes? And how much are you actually starting to do that?
Well, so I think it is very realistic. I take a step back. If things were, or Thursday hadn't come out the way it came out, I think the outlook for the markets over the next 6 months would have been materially different, positive. In the sense that the Fed would have cut, or Fed may actually cut, and that would have a very positive impact on the market and all of those things. I think the risk to that scenario and the Fed going into the background is increasing as things move this way.
You brought up the Fed. What do they do?
Well, I think as far as the Fed is concerned, we should take them at face value. I think they said they are waiting for the data, and they expect supportive data, and down the road they will cut. And I think that's how it is going to play out. Talking about bringing it forward to July and all, I think that's just a bit of nonsense.
Sure, but given
unrealistic.
everything you've just told us as an investor from your perspective, does that not apply to Chairman Powell when he sets monetary policy, the FOMC?
Again, he has told us he's not in the political arena repeatedly. So I think the driver for them has to be really real-time data, and they have told us that, and I think we have to take them at face value.
There's also a sense that once they start, they don't want to go the other way a few months later.
Well, 100%, and that is why they will wait. That is the primary reason why they unless the data is
distorted. You say wait, can I just jump in?
Yes.
Wait until after November?
Perhaps. Again, if the data for the core PCE doesn't end up being as soft as it was in May over the next few months, they have all the reasons for them to wait. And the likelihood of not doing anything in 2024 is significantly higher than zero.
So where do you stand now? T-bill and chill, and maybe a little NVIDIA?
Yeah, I don't think that thesis has really changed that much.
Okay, but what are you doing on the margins?
The equity markets have done much better, and so it hasn't worked out that well. But from a kind of a risk management perspective, that's not a bad strategy still.
Okay, so what would you have to see to shift that? maybe.
I think if the Thursday hadn't happened, I think the driver would have been fed to kind of get a lot more comfortable with valuations and growth, but it's a reality.
Okay, but are you basically saying that because of President Biden's performance, the Fed is going to be less likely to cut rates before November?
No, that's not what I'm saying. What I'm saying is the Fed will do what it will do. The impact of what the Fed does on the market would be significantly less because of what happened on Thursday.
Just to be clear, though, you think that Treasury move was off the back of Thursday night?
Yes, absolutely. Otherwise, with the PCE data that we got, the likelihood that you have a bond sell-off, I think that would have been very, very unlikely.
So the short-term risk of this bond market sell-off?
I think as policy uncertainty increases, I think the curve steepens rather than flattens.
Absolutely fascinating. This is what we heard, by the way, from Morgan Stanley as well, looking for that steepener in a yield curve.
Yeah, that was what Matt Hornbach was saying, and that's what we're hearing from JP Morgan's David Kelly as well, that it was a game changer, that we saw a real shift in terms of both market expectations and political expectations. Thursday night was a game changer.
Krishna, does it ever happen this early in election cycles to really be doing this in the end of June, start July?
Well, but I think this was extraordinary. I don't think something like this has ever happened before, where you had some level of political, if not certainty, likelihood, and that getting demolished in one day. I think that's very unique in U.S. elections.
Is there more to this trade? If we saw Friday at the beginning of it, even before the election, is there more for the sell-off, just in anticipation of what could happen?
I think, again, if the Fed acts the way that market expects it to, the likelihood of that being supporting for bonds in the short run, I think, is significantly less now than it was before.
Amazing. Krishna, it's good to see you. So much to think about. Krishna Mamani there of Lafayette College, thinking about trades for the election on the 1st of July.
Well, I mean, this just sort of raises this question of game theory. At a certain point, we start talking about whether Joe Biden's going to step down. What if the market provides a check on him? I'm serious. I know it sounds really far-fetched, but we're at a point where, I don't know, anything's possible.
My head's spinning already.
Yeah, mine is too.
It's going to keep spinning. Coming up in the next hour, Cameron Dawson of New Edge Wealth will be joining us. We'll catch up with George Ferguson of Bloomberg Intelligence. Lots to talk about on the Boeing front. Then we'll speak to Yelena Shuletieva of BNP and Steve Rashudo of Mizuho, looking ahead to a week full of economic data and a speech, a conversation with Chairman Powell tomorrow. Equity futures positive by 0.25% from New York. This is Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Incoming data, in particular the more important data, it still shows the economy doing well.
Even with further progress, while welcome, it's still not enough to justify a top-line move in terms of monetary policy.
Interest rates have done their job. They've brought demand and output down from the peaks we saw.
I always say to people who want the Fed to start ASAP and move quickly, be careful what you wish for.
The more likely error right now is that the Fed will not start cutting early enough and then will overshoot on the way down yet again.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
I've got to say, it's already been quite an interesting start to Q3. Already this morning, a few hours into the program, guest after guest talking about the prospect of a Trump presidency after Thursday night of what it means for financial markets. We heard it from David Kelly of JP Morgan, heard it just moments ago from Krishna Mamani.
I'm so glad that's where you started. To me, that's my big takeaway, this idea that Thursday night was a game changer, not just for the political sphere, but also for markets, as people game out the implications of not only a Trump presidency, again, but also what a Republican sweep would do for both the deficit as well as immigration policy.
Consensus forms slowly. What I've been surprised about so far this morning is just hearing a series of guests talking about how depressing it would be for growth. Been surprised by that. And you saw that from Morgan Stanley's Mike Wilson too, that risks are skewed to the downside for growth under Republican win scenarios. Make sense of that.
Well, it kind of flies the face of a bond market tantrum, because if you think of suppressed growth, that typically would indicate some sort of flight into treasuries. So this raises the question that Krishna Mamani was saying, and you could say it's too cute, but initially the knee-jerk reaction would be to the tariffs and to the potential inflationary pressure. Longer term, growth would come into question. A lot of hypotheticals. To me, the larger issue is, at what point does the market act as a check on what some of these policies could do? We've heard that both in France. Now my question is, in the United States, is the ghost, and I keep saying this, but it just is an interesting idea, is the ghost of a Liz Truss moment really hanging over some of the political shifts that we're seeing, both in the US and in Europe?
Got this vision of Liz Truss sort of hovering over bond markets.
Oh, me too.
It's a vision I want to get rid of.
It's actually a big head of lettuce, just hovering.
These are the hypotheticals, or baguettes, based on what's happening in France. It's not my joke, that's someone else's. We can confront the economic data. This week ahead's fascinating. The ISM a little bit later today. Jolts, we'll get the ADP, we'll get jobless claims, we'll get payrolls on Friday, we'll get some Chairman Powell commentary as well. There is a much, much bigger focus again, a renewed focus on the labor market.
At a time when the Fed seems to be increasingly focused on potential weakness in the job sphere rather than any kind of ongoing stickiness in inflation. Issue to me is there's been a lot of confusion. Even Jay Powell himself saying he doesn't really understand the divergence between the household survey and the others, and basically saying it does seem like maybe, what was his word? word.
Overstating.
Maybe it's overstating the actual data, which is the reason why the JOLTS will be interesting. Do we see an increase in some of the skepticism result in a decrease in potential available job openings?
Going into all of that, the price action looks like this. Here are your scores on the S&P 500. Equity futures positive by 0.25%. In the bond market, yields a little bit higher, up by double digits on Friday. Up by more than 10 basis points on a 10-year, up another single basis point this morning, 440.99. In foreign exchange, we talked lots already about round one of voting over in France, the euro. At least we're a little bit stronger here by a third of 1%, 107.47.
It wasn't as big of a win as it could have been, so I guess buy euro. I just wonder how much this is people kind of shrugging off how much of a political shift this could actually be. We heard from so many people looking for opportunities to buy into the weakness that we saw in the French bond market. Whether it sticks and how far it will go will be a key question as we head into round two.
We've done this once already this morning. Let's do it twice. I want to pick up on the question you asked. It's the right one. Whatever happens over the next week, to spreads, the difference between the French 10-year and the German 10-year go back to where they were, around 40? Or do they stay at these levels or maybe even carry on grinding wider? And what we heard from TD is we're not going back to the 40s anytime soon.
Because ultimately you still have this shift, this swing in some of the political sphere. In France, I just wonder the other side of this trade. Germany isn't exactly some bastion of stability in terms of its political sphere. So at what point does that become part of the equation too? And you just see an increase in yields in both sectors.
Cleanest shirt. Something like that.
I love that discussion.
Yeah, okay.
Really good.
That's where we're at. Coming up this hour, this is your lineup for you. Cameron Dawson of New Edge Wealth as the third quarter kicks off. George Ferguson of Bloomberg Intelligence on why the DOJ is set to charge Boeing. And Mizuho's Steve Rasciuto on why he's sticking with his call for no rate cuts in 2024. We begin with the big issue, positioning for the second half. Cameron Dawson of New Edge Wealth saying this: the trend is still your friend, powerfully up. Don't fight the trend of positive equities, but be aware that the market could shift quickly if growth forecasts for EPS or GDP begin to get trimmed. Cameron joins us now for more. Cameron, good morning to you.
Good morning.
Are we starting to see that already? Are those growth estimates starting to be trimmed?
It happened Friday. For the first time in 12 months, we saw 2024 GDP estimates get revised lower. It's just slightly, and it's just one data point, so it's not quite a trend yet, but that is a big shift from the last 18 months where we've had rising GDP forecasts pretty much every single month, which has provided a boost to equities, provided a boost to credit markets. That's why you can trade at such high valuations, such tight spreads, because you're raising forecasts. If that starts to change in a more meaningful way, that's when you could have a more risk-off move.
Growth has started to disappoint relative to expectations as well. That's been a theme with the incoming economic data. Can you walk us through what you're looking for in the data this week? Are you in the camp of Mike Dada, where you think that we're weak here and the Fed's got to respond, or David Kelly, where things are slowing but they're not slow and this is just normalization?
I think it is more of the normalization. We're not at the point yet where things are falling off a cliff that you say we're headed deep into a recession, but we're definitely coming off the boil. And if we think about the labor market, to your point earlier, you have two very different stories about the labor market. We think it's much more likely that it's somewhere in between, where the real jobs number is somewhere around 100,000. What that means, though, is more important for the unemployment rate, because we're already at the Fed's target for this year at 4.0%. If that continues to creep higher, and if you continue to see this moderation in the PCE, it does give the Fed the degrees of freedom to at least do one rate cut, maybe two rate cuts this year. But then the question is, what happens in 2025 if they start to ease policy, fiscal remains stimulative, and then we start thinking about the Republican sweep?
You say that it's important to just keep going with this momentum trade just simply because it is so powerful. And yet something that Torsten Slok put out there was the top 10 companies in the S&P 500 make up 35% of the market cap, but only 23% of earnings. We are basically pricing in a much more significant boost to earnings in some of the names that have been delivering, let's be honest. Does that concern you at all, that if we do get a reality check, it will be a painful one?
We are slowly shifting from a world where the stocks were going up because earnings estimates were getting revised so much higher for these big mega cap names. The market was just chasing the earnings estimates higher. Now we're at a point where it's really multiple expansion that's boosting names like NVIDIA, like Amazon. And so the question is, how much can that sustain, mostly as the earnings growth rate for the Magnificent Seven decelerates significantly into 25. And even into the back half of this year, you're going from a peak of over 60% growth for Mag 7 names to about 15% by the time we get to the fourth quarter. And interestingly, the market has priced in that the rest of the 493 will have about the same amount of growth. The challenge with that, though, that's a really high bar for those 493 names to see mid-single digits or mid-teens kind of growth, which just means there's room for downside surprise in earnings.
Well, this is something that David Kostin of Goldman Sachs really picked up on, that basically that earnings bar is the highest going back to 2021. This all paints sort of a bearish picture, and yet you're still bullish. So how much do you sort of shift your position based on something that you see in the data or based on an earnings report versus just go with momentum because that's what's working?
Yeah, the trend, momentum, and the liquidity has been so supportive. We think it really becomes more of a challenge into 25, where we do think 25 estimates are too high. If you unpack them, you have GDP or revenue starting to accelerate and 100 basis points of margin expansion. That's in a world where nominal GDP is going to decelerate. You typically don't get revenue accelerations and big margin expansion in a moderating nominal GDP kind of economy. So we think the $278 a share for 2025 is firmly too high, but it may not be yet that we're starting that revision down cycle.
There's a phrase you used, you said, and then it was followed by Republican wave.
Yeah.
Is it too early to start considering that right now?
Based on the polls, no. And I think the interesting thing is comparing the starting point of a potential Trump presidency today versus 2016. In 2016, the unemployment rate was 4.7%. Wage growth was growing in the mid-2s. That's different than today. Wage growth is growing at 4%. So if you do something that constricts labor supply, what is the risk that you see a more pernicious kind of wage inflation cycle if you lose that bottom tier of workers that are coming in that have helped keep wages in check? I think you can do a similar thing on tariffs, where you had deep deflation of durable goods at the start of his presidency. Durable goods inflation went from -2.5% to about flat. So how much could you see tariffs and immigration contribute to this inflation outlook?
So am I selling bonds?
I think that the risk is that yields do move higher, because the other thing we heard from the debate is that neither party is considering austerity whatsoever. So get used to higher Treasury issuance in order to fund the deficits.
So you basically agree with what Krishna Mamani was saying, that Thursday night on some levels was a game changer in terms of your market views and the increasing certainty around a potential outcome in November?
I think that the best output for this economy would be gridlock, meaning that they can't do too much. Don't change it. If it's not broke, don't fix it. The challenge is based on Thursday night, does that raise the odds of a Republican sweep, where you could see more sweeping policies? You could see the full extent of the effort of policies actually be enacted. And I think that would be the risk for the market, is that you do get this inflation, you do get higher deficit spending, and to point out the tax cuts that you would potentially get going into a second round of a Trump presidency are not nearly as big as what we got in 2017, meaning we had those tax cuts to offset these other things. You're talking about 1% to 2% lower in the corporate tax rate, so you don't get nearly as much sugar as you get with the spinach of things like tariffs and immigration.
We're hearing this repeatedly throughout this morning. Cameron Dawson there of New Edge Wealth, another guest, Bramo, building on the work of Friday off the back of Thursday evening.
Yeah, I like spinach, by the way. I'm just saying, people say sugar versus spinach. Spinach isn't terrible, but
your vegetables, whatever.
Okay, but I agree with you. I think that this, to me, is probably the biggest takeaway of this morning so far, is that essentially people are saying that Thursday night was a game changer for markets, not just for politics. And it comes to a point where you start to have to really contemplate some of these policies getting into effect without any barriers whatsoever.
Yields creeping high this morning by 2 basis points on a 10-year, just a little north of 441. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Hurricane Beryl is set to cause massive damage across the Caribbean's Windward Islands throughout this morning. Right now, the storm is moving west as a Category 3 hurricane towards Barbados, St. Vincent, and the Grenadines. The National Hurricane Center says fluctuations are expected within the next day or so, and the storm's gusts are still life-threatening. It will potentially threaten Haiti, Jamaica, and the Cayman Islands throughout the week before possibly making landfall in Mexico on Friday. BlackRock is nearing a $2.5 billion deal for private capital data provider Preqin. That, according to people with knowledge of the matter. The deal may be announced as soon as today. It would also make Preqin's founder richer than his new boss, Larry Fink. Mark O'Hare owns nearly 80% of the firm, so after taxes, he will net roughly $2 billion. Fink's net worth is $1.7 billion. Preqin competes with Bloomberg LP, the parent of Bloomberg Television. And more on the crazy weekend for sports. In Austria, George Russell clinched Mercedes' first win of the Formula One season, but not without some drama. Late in the race, crash between frontrunners Lando Norris from McLaren and Red Bull's Max Verstappen cleared the way for Mercedes. Norris was trying to take the lead from Verstappen. Instead, the crash forced him to retire from the race, and Verstappen suffered a puncture and a 10-second time penalty for the crash, ultimately finishing in 5th. And that's your brief, John.
Danny, thank you. Haven't seen an end to a race like that in a long, long time. Toto Wolff of Mercedes was so surprised by what was happening. He pressed the button and got in the ear of George Russell and started almost celebrating that he could win. And George Russell said he almost crashed because of that.
Just out of the surprise.
The end of that race was just ridiculous, and you could see it coming. Norris and Max are actually friends off the track, and I wonder if they're actually going to kiss and make up after what happened Sunday.
It just shows that that's the only way for Max Verstappen not to win, is essentially a massive crash.
Something like that. Caused by him, I have to say. Caused by him. Up next on the programme, the morning calls. George Ferguson of Bloomberg Intelligence joins us too on why the DOJ is prepping criminal charges for Boeing. The latest reporting from the team here at Bloomberg just around the corner. From New York as we kick off Q3. Can't believe it's July. Ridiculous. Equity futures positive by 0.25% from a beautiful New York City. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
A little more than an hour away from the opening bout, with equity futures positive by about 0.25% on the S&P. Yields drifting a little bit more higher, by 2 basis points, 441.58, and the euro stronger by, let's call it 0.25%, at 107.43 on euro dollar. The time now for some morning calls. First up, Wells Fargo adding Kroger to its third quarter tactical ideas list. The firm seeing strong potential for an earnings beat against the wall of worry for grocery chains. The stock is up by a couple of tenths of 1%. Your second call from Morgan Stanley, raising its price target on Nvidia to 144. There's another one. There's always one. The analyst raising 2025 estimates, but also noting frothiness is lower than it once was. Believe it or not, Lisa, kicking off Q3, we're down about 0.75% on that stock.
Wow. The fact that it's down must mean that it's time to buy. It's a dip. Honestly, at this point, if they can increase their earnings expectations, well, I get it.
Absolutely ripping again for 2024. And your third and final call, Canaccord raising its price target on Rivian to $30. The analyst highlighting the EV maker's, quote, monumental partnership with Volkswagen, calling it a game changer of a transaction. We're down on that stock by about 0.5%. Let's stick with transportation. Boeing is still in the spotlight. Bloomberg reporting that the DOJ plans to slap criminal charges on the plane maker related to 2 fatal 737 MAX crashes. This as Boeing is set to buy back Spirit Aerosystems in a $4.7 billion all-stock deal. George Ferguson of Bloomberg Intelligence joins us now for more. Now, George, two stories here. As you know, the reports of the DOJ criminal finds and the story that ultimately they're going to get back together with Spirit Aerosystems. Can you walk us through the second story, how beneficial this will be to both companies?
So I think the second story, Spirit Aerosystems, is extremely important to Boeing, because this is just going to give them an opportunity to streamline the manufacture of the Boeing 737. That's the big money maker for the company, generates a lot of the cash flow, a lot of the profits. And so, really the path for the recovery for Boeing flows through getting MAX 737 production and deliveries higher, up into the 40s and 50s at least, and with a view towards even better numbers than that. And so I think given this streamlining, I think it's going to give Boeing the opportunity to really get things done down at Spirit that they need to stabilize the manufacturing process. I think very interesting as well this morning, Airbus announced it wasn't a purchase, they're taking away of the Airbus portion of Spirit Aerosystems work, and they got paid $559 million to take that business back, which is sort of another confirmation to us that Spirit had given Airbus a pretty nice deal on 350 and A320 manufacturing. I think that's going to help a lot as well, because you take that pain out of Spirit Aerosystems that they would have had if they hadn't got reabsorbed by Boeing.
George, as you alluded to, the underlying hope of many investors is that production starts to ramp higher again. This sort of folds into the story that we've been writing here at Bloomberg on the DOJ, set to charge Boeing. And some of the options here, ultimately the DOJ is telling Boeing to pay a fine and hire a corporate monitor. I just wonder how constrained they'll be by the regulator going forward from here, even with this combination.
Yeah, so I mean, from what I'm reading, and from if the information is coming out from what over the weekend, to me it doesn't sound terribly constraining. Now I don't totally understand how much influence that monitor will have. Obviously, it should have a lot on Boeing production, but I think really quality had slipped so hard here at Boeing for so long, and there were so many problems that I feel like they almost ought to just welcome that and bring that in-house, because I think fighting over monitoring right now at Boeing it looks bad, right? And the fine itself doesn't look that material to me as a financial analyst, a couple $100 million, and it feels to me like they don't want a fraud conviction against the company. I'll point out the caveat, I'm not an attorney, but it seems to me that with a fraud conviction, they could have other problems with government contracts. So it seems very doable for them to sort of, put that away, put that aside at this point, and admit.
Is there a sense that Dave Calhoun can still right this ship at a time where his leadership is set to end, unclear who's going to take his place, and the real questions about his credibility, given that they have yet to really solidify what exactly went wrong?
Yeah, I mean, I guess I don't know that I see Dave Calhoun as the ship rider, if you will. I guess I see, unfortunately, there's no delaying, I think, this DOJ issues and the Spirit Aerosystems issue, and the CEO search is super important. So I think you can't really accelerate it. You can't, shortcut that whole thing. So I kind of feel like Dave Calhoun's more of a caretaker here, and it would have been nice to have these situations fall to the next CEO, but you can't wait around. So I think in some ways, Calhoun's going to help maybe clean up some of the mess here as he goes out the door. A mess that's not all his, but clean up some of the mess. But this is the beginning of a longer process of righting the ship, and it goes through the manufacturing plants, it goes through stabilizing quality, improving builds, and so it's the beginning. But I don't think he's righting the ship.
There's a larger question, and forgive me, I'm thinking aloud here, George, but it feels like at a time where the United States and other countries are trying to emphasize industrial prowess and industrial production, Boeing acts as a sort of cautionary tale, not just for sort of central planning, but also for this industrial ability at a time where a lot of industrial centers were hollowed out during the pandemic and where it hasn't been a skill set that has been prioritized in a lot of communities. How much is the ambition of becoming an industrial behemoth challenged by some of these shifts that we've seen in the labor market as well as the post-pandemic realities?
Yeah, I mean, I think there is a bit of that that's sort of gone on in America over the last couple decades. And I think there's been a heavy focus on financials. And in that focus for financials, you push things out to lower cost locales, and you let other people do the engineering and the manufacturing. And I do think it's been going on for, I think, decades for Boeing, and we're seeing it now. It's sort of manifesting itself all at one time. I think because of the stress of the pandemic, because of the stress of the MAX crashes were the indicator prior. But I do think it's a little bit of a cautionary tale for manufacturing. And I think you've got to be prepared to control the important portions of your manufacturing process, especially the engineering. There was a time where they were talking about pushing some of the design, and they tried in the 787 out to suppliers. I think if you're going to be a great manufacturer, I think you want to keep those skill sets, at least the important parts of it, in-house and not be so financially focused. And I guess we'll see, but I think it is a cautionary tale.
Hey, George, good to hear from you. George Ferguson there of Bloomberg Intelligence. George giving a nod to the potential fine. Let's go through the numbers. This from the team here at Bloomberg. The department will inform Boeing it will have to pay an additional criminal fine of $243.6 million on top of the $243.6 million already paid back in 2021, that deferred prosecution agreement, bringing the total amount of fine close to $500 million. So, Lisa, I went off on my opinion on that. Maybe the stock can. Boeing's down by just 0.4% in the pre-market.
Yeah, well, I'm just thinking about how much the cost is for an average plane, and you think about how many planes that really accounts to, and ostensibly, especially if they're able to ramp up production, that probably won't be that significant. The question is whether they can ramp up production, the perception-wise, what this does to not only the competitive edge, but their ability to attract the talent that they'll need to really come out of this period a stronger company.
It's a slow burn. That stock is down by 0.4% in the pre-market. Up next on this program, just around the corner, we'll catch up with BNP Paribas' Yelena Shuletseva alongside Mizuho's Steve Rashudo. We'll talk about the economic data still to come this week, Chairman Powell tomorrow in Sintra, Portugal, at the ECB's big annual get-together. This comes from Andrew Honhorst of Citi just moments ago. His estimate for Friday, Lisa, they're looking for 155,000 new jobs and a 4% unemployment rate.
Yeah, they've been looking for just a general weakening. Just to sort of catch up, I was looking at this, a new 747 plane, not to go backwards, but
we can go
costs $250 million. So that's one plane that would be the fine. This is sort of what I wanted to get at. To the point of the data, I do think that Andrew Hollenhorst's point is an interesting one, that we're going to see a steady weakening, and whether the labor market data for this week will really kind of be maybe the cap on a lot of the data that we've been seeing.
I think most of us at the beach sort of with the Bloomberg Anywhere on, looking for payrolls to drop. Is that what we're doing on Friday?
The truth is, we're both off. And yes, we'll both be checking, I'm sure.
Obviously.
Obviously.
Yes, Bloomberg Anywhere.
always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
60 minutes away from the opening bell in New York City, with equity futures positive here by 0.25% on the S&P 500, on the Nasdaq positive also by 0.25%, on the Russell. The small caps up by 0.4%. Can the rest of this market, Lisa, actually do something after tech leads some big gains for the Nasdaq?
Some people say that's really the ultimate test at a time where the question is whether some of the underperformance of the rest of the 493 stocks is a warning sign for what's to come, a sense of the weakening that a lot of people are expected to see in the data.
Turn the page, switch up the board and get to the Treasury market. We're down here. Yield to higher across the curve. Up 2 basis points on a 2-year to 4.77. On a 10-year up 4 basis points, Lisa, to 4.44. Guest after guest so far this morning talking about a bear steepener of this yield curve on the prospects of a Trump win in November.
Guest after guest saying Thursday night was a game changer, not just for politics, but also for markets, where suddenly the chance of a Republican sweep becomes much more in focus. And the chances that, at least in the near term, that's going to be inflationary and potentially send longer-term yields significantly higher.
What does this mean for the FX market? Let's turn the page and get to foreign exchange. The dollar's had 4 consecutive weeks of gains. For the euro dollar looks like this. That exchange rate at about 107.41. We're positive by about 0.25% on the euro this morning off the back of the French election over the weekend. So let's get to that. Under surveillance this morning, a top story, an inflection point for French President Emmanuel Macron. His centrist alliance and left-wing rivals now weighing whether to pull candidates from the second round of the election in just under a week. The discussion coming after Marine Le Pen's national rally dominated the first round of voting. We're seeing spreads a little bit tighter. Germany versus France, the euro a bit stronger, French equities recovering, but still huge question mark over the future of this government.
And given the fact that Marine Le Pen didn't get as much support as some people expected, doesn't take away the fact that she dominated and that her party came in first. Key question that sort of underpins a lot of what people are saying is there a shifting tone in what the far right looks like? We talk about what we saw over in Italy, whether this is the exact same kind of threat that some people thought that it posed as it was in the past. And that's key to understanding whether the left and the center can kind of make some sort of coalition to counter that potential threat.
I think what we've seen on the right, and we have a case study for it in Maloney, is that they're trying to prove that they can govern, and that they can govern without crisis. And that's ultimately going to be the path to long-term success. And you can hear that from Marine Le Pen, the way they start to talk about their policies. It's a recognition that they can't go as far as maybe they would have liked to.
The ghost of the Liz Truss moment.
I mean, possibly,
hanging over the markets in France, hanging over the markets in the United States. I mean, is that really ultimately what we're talking about?
You don't want to be the crisis candidate. You want to be the populist game changer. I get all of that. But ultimately, it's a tightrope you've got to walk. You've got to be one and the other at the same time. You do not want to be the crisis candidate.
You do not want to be Liz Truss, which is the reason why her ghost is hanging there. Ultimately, how much does this act as a check on what some of the most extreme policies could be?
Yeah, and that's going to be the story maybe for us later this year in this country. Will this Treasury market act as a regulator for some of the ambitions of whoever gets in power later this year? Elsewhere, trouble continuing for Boeing. We talked about it briefly earlier. If you missed it, here's a summary. Bloomberg reporting the DOJ plans to slap the plane maker with criminal fraud charges related to 2 previous fatal crashes. This as Boeing agrees to buy back Spirit Aerosystems. The deal expected to improve manufacturing, but will saddle Boeing with more debt. That stock is down, Lisa, by just 0.75%.
You know, you just wonder when this story is going to end up ending. In terms of the fine, we did point out that $240 million fine is equal to about 1 plane sale. So it's not exactly going to cripple said company. Yet there is this feeling, when is this going to end, and when are they going to actually develop the prowess to really make planes at the pace that a lot of the airline companies would like?
Longer than they would like, that's for sure. based on recent events. The week ahead's packed. We've talked about it a few times already, I know. Looking ahead to the week ahead, Fed Chair Jay Powell speaking tomorrow at Sintra ahead of New York Fed President John Williams on Wednesday. We'll get a rush of jobs data, including JOLTS, jobless claims, and the June payrolls report on Friday. Mike McKee's with us around the table. Mike, your week is a busy one.
It is a busy one, and politics, as you say, kind of overhanging all of it this week. I get to break the ISM manufacturing numbers at 10 o'clock this morning, and of course, at 10 o'clock this morning, the Supreme Court rules on Donald Trump's immunity, so you got to have a very wide brain to take this all in. But ISM would be interesting because basically the narrative is the economy is slowing, and the manufacturing ISM has been below 50 for quite some time now. Does it go over that and disturb that narrative? As you mentioned, Powell and the French president of the ECB are in Sintra together on a panel, so you can bet what some of the questions are going to be tomorrow. Then, as you mentioned, a lot of job stuff on Wednesday because we get jobless claims and ADP, ISM services, everything packed into that day because, of course, on Thursday you're all going to be at the beach. Friday, June jobs, and that's going to be
You'll be here, I hope.
Yeah, I will be here.
Good.
I'm hearing not everybody around this table is going to be.
I'm a loyal viewer, listener of Bloomberg Product, and I'll be listening and watching to Mike McKee break down the numbers.
That's so emotional. I'm sure he's very appreciative of that.
Of course he is.
I'm sure he much,
debating whether to wear a tie or not for you.
I think you should wear a tie on Friday. I will ask you this about Friday. How are you going to navigate these numbers when Chairman Powell comes out and suggests that maybe they're overstating the true strength of this economy?
Will he? I mean, that's going to be an interesting question to Powell. We did ask in the news conference about the difference between the household and the establishment surveys, and nobody can really explain the household survey, so they're kind of looking through it. We'll see what we get here. Again, we're looking at 188,000 as the consensus forecast, and everybody says, well, that's way down from last month, but last month was way up from what was expected, so we're still running fairly strong. But the kind of amazing thing this month is we get so much Powell. We get Powell tomorrow. We get Powell the following week with his Humphrey Hawkins testimony on Tuesday and Wednesday. The week after that, he's at the Economic Club of Washington. And then the final week, he gives his news conference. More Powell, I think, in a month than perhaps we've ever seen. So it isn't going to be hard to know where the Fed is.
July, going full Powell. So here's the issue. Which data is actually going to move the needle the most? People were talking about the unemployment rate as being maybe one of the key aspects. JOLTS also tomorrow, front and focus. What are you looking at most importantly?
Well, we'll look at unemployment because the Fed is looking at unemployment as an indicator that the economy is slowing down. And it's maybe a little bit of a radar gun for speed, how fast the economy is dropping. If we got a big rise in the unemployment rate, that would change the narrative. And then beyond that, we'll be looking at CPI the following week on the 11th as everybody keeps track of what's going on with inflation.
Just a week away. Mike McKee working so we don't have to. Mike McKee, thank you for that and for everything you do. Joining us now is BNP's Yelena Shuletseva alongside Mizuho's Steve Rasciuto. Great to have the both with us. Yelena, I want to come to you first. This is something you said, and I repeated a little bit earlier this morning. Should have attributed it to you. When I said someone says this, I mean Yelena says this. You're looking at the jobless rate on Friday more than you are the actual headline payrolls number. Just walk us through that.
Sure. So I think the range of payrolls will be pretty wide. That could satisfy the definition of gradual normalization rather than deterioration in the labor market. So we can see payrolls as low as 150 probably, or as high as 250, and that's going to be just fine. What is really important in this upcoming report is the unemployment rate, because it increased in the last two reports, and if it increases again, that could potentially trigger the SAM rule. And if it goes, say, to 4.2%, that could trigger the SAM rule. Whether it's a recession or not, that's a big question, but that could spook the markets for sure. We are looking for an unchanged reading on the unemployment rate, just simply because the previous number was driven higher by young adults looking for a summer job. So I don't think that is sustainable. That's one off factor. But it's possible that the unemployment rate could be quite interesting on Friday.
Steve, let's bring you into the conversation. Would you agree with that?
Well, I mean, look, the unemployment rate is clearly a highly political indicator. It gets a lot of press. people tend to understand what it means. So therefore, it does have importance in terms of the overall dynamics in here. We also have to understand that, 4% is still a very, very low unemployment rate. It may be up off the bottom of 3.7, but it's still a very, very low unemployment rate. And it's still well below the natural rate of unemployment. So therefore, I think, saying, 4.1, 4.2, this is going to signal a recession or things of that matter. When you've got industrial production that's been good, you've got initial unemployment claims that are low, you've got payroll employment that's going to be a very, very healthy number. All kind of argues to me that we're making, mountains out of molehills in here. This economy's doing well.
And you've been one who's been talking about how maybe the Fed actually has to worry more about a resurgence in inflation than anything else, and that you still sort of think maybe these concerns about growth are a little overdone. What are you pointing to? What do you think is going to sort of give that sense in the data this week, or that's under the hood that maybe people aren't recognizing?
Well, the jobs numbers themselves are critical to what's happening in terms of the underlying pace of economic activity. Jobs create income. Income and hourly earnings create wage compensation, and wage compensation is what drives consumer spending. You've had a little bit of an inflection in consumer spending in the second quarter relative to the first quarter of the year. But again, we've been anticipating an inflection point in the economy because we're shifting down from a 3.3%, which is well above trend, to a 2.3%, which is still above trend growth environment. So you're going to see some flexibility in the data, and I think that flexibility is coming through, and people are overreading it because they want to believe. The Fed tells you they want to cut rates, so therefore you read every number as, this is the one that's going to get the Fed to move because they're telling me they want to move. They're itching to move, so therefore they're going to move. Yet the Fed has repeatedly pushed out the timing of rate cuts, and as a result, they have a winning hand. They're getting a macroeconomic environment that fits their scenario. They're getting an interest rate environment that fits their scenario without doing anything because the market keeps on saying, this is the number that's going to make them cut rates, and therefore nobody could short this market.
Yelena.
Yes, I agree with Steve about the pace of consumer spending and consumer income. Actually, last Friday, we got some numbers that are pointing to a very strong growth in consumer income. So yes, we did see some moderation in consumer spending, particularly on discretionary services categories. But I think we're fine in terms of we're not deteriorating, we're growing slower. And that's the key point here. I think the numbers that I will be watching this week also include JOLTS. JOLTS data is very important. We're going to see a slowdown in the decline in openings. That's a key point for me because we're at the point on the beverage curve when further declines in vacancies could lead to high unemployment rate. And again, that goes back to that point I made about the unemployment rate. That is becoming much more important over this period. So if we see a significant decline in vacancies, that's going to be a warning sign. I don't think that's going to happen.
As Steve Risciuto said, 4 is still very, very low. But you also mentioned the SARM rule. When you start to creep towards 4.2%, how rare is it to start to inch higher and then just stabilize at these levels?
It's very rare. But I think everything in this business cycle is very rare, right? We haven't seen much of what's going on back in the history. So I think the speed of increases in the unemployment rate really matters. So if we see a rapid increase to 4.2% or 4.5% going forward, that's going to be very warning, like a warning signal. If we gradually rise to that level, say 4.2% by the year end, that's going to be just fine because it's the SAM rule will not be triggered.
Steve, this has come up repeatedly on this program. How much daylight is there between deterioration and just normalization?
Well, there isn't that much in terms of people's expectations because the market has been told the Fed wants to cut rates. So the market has this skew. But the reality is there's a lot of gray area in the data, and there's a lot of gray area in the terms of the interpretation. And this is one of the risks that the Federal Reserve, takes in here if they were to cut interest rates without having the data on their side. You know, you could wind up with an overreaction in the market, and Jerome Powell indicated this in his last press conference, that they were worried about an overreaction if they were to move policy, and that overreaction then could lead to a reacceleration in growth and put them in a real political bind with their own analysis. So I think the Federal Reserve has to move very, very cautiously in here, and I think they need to see clear evidence before they move monetary policy. And I don't think they're going to get it in any of the data that's coming out here or in the next few months.
The discussion that we're having right now is one that we could have had last week at a time where it was pre-debate, you know, I guess PPD, pre-presidential debate in the United States. We've talked to a number of different people here on the show this morning talking about how it was really a game changer, how we really saw a shift where suddenly the likelihood of a Republican sweep became greater and the implications of that. Yelena, does it change things for you in your economic forecasts when you take a look at all of these sort of competing factors within the labor market and the overall economy, and then you factor in what would higher tariffs do? What would lower immigration do?
Absolutely. That makes 2025 picture more inflationary, right? So the probability of high inflation next year has risen after the events. I think it's really important to look at tariffs policies, tax policy, and all of the immigration, of course, and all of it. You know, our team put it in a model, and that spits out a very inflationary outcome for 2025. It doesn't affect growth that much in the initial run of the model, but if you factor in the Fed policy and how the Fed will have to react to inflationary environment, that could really push growth down, and that's going to be a bad outcome, of course.
Steve, do you agree with that? And is it sort of a game changer in your view, what we saw Thursday night?
Not really. I mean, I think either one of them were going to lead to an inflationary tendency in the economy. They're both going to spend money. We're just going to spend them in a different way. And we're both going to have inflationary implications from policies. We just choose to pick on some versus other. The reality is we've got a $2 trillion structural deficit, and we're heading to either a $2.5 or a $3 trillion deficit as we go forward in here. That's additional fiscal stimulus at a time when the reality is monetary policy is not as restrictive as the Federal Reserve thinks, which is one of the reasons why we've been saying they shouldn't be cutting interest rates in here or even considering it, because monetary policy is not that tight, because we think the neutral level of the Fed funds rate is closer to 4%. And with the forward structure of interest rates anticipating, 3 to 3.25% by the end of 2026, forward rates aren't particularly regressive in here. So I think the reality is we're going to have a stronger economy from government spending in 2025, 2026, no matter who's in the White House.
Steve, still looking for no cuts in 24. Steve Rashudo of Mizuho. Steve, thank you, sir. BNP's Yelena Shiretseva as well. That final question there, Bramo, it's an important one. And we heard what we heard from Christian Mamani. We heard it again, which ultimately is in the near term tailwind for inflation and the long term headwind for growth.
Which is really the key question here. How much do people have to start factoring that in at a time where it's looking more likely, at least based on the polls, which you can reject if you want, or you could say that maybe these policies are going to shift, or there's going to be the ghost of someone hanging over the idea here that maybe there's going to be pushback against some of these proposals. Nonetheless, person after person today has said this was a game changer and it would be more inflationary and potentially slow growth longer term.
When are we going to get past this Liz Truss nonsense? How long is that going to take?
If it's up to me, we're not getting past it for a long time.
Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's get out to Danny Berger. Hey, Danny.
Hey, John. Israeli Prime Minister Benjamin Netanyahu is vowing once again to continue fighting Hamas until the militant group is eliminated. Netanyahu spoke after an Axios report that claimed the Biden administration sent around amended language for its ceasefire proposal between Israel and Hamas. The report goes on to say that the U.S. is working with Qatari and Egyptian mediators to change what's in the first stage of a three-part deal. Big tech companies are looking to nuclear energy to power the next generation of data centers needed to support AI. Amazon, for its part, is moving towards a deal with Constellation Energy. That's the U.S.'s largest owner of nuclear power plants. That all according to a report from the Journal. The deal would support AWS, its signature cloud product. Amazon had also purchased a nuclear data center in Pennsylvania back in March. And shares of Chewy this morning up 11.33%. The stock gaining a boost after Keith Gill, aka Roaring Kitty, disclosed a 6.6% passive stake in the online pet retailer. The stake is about $245 million. Both Chewy and Petco briefly soared last week after Gill posted a cartoon image of a dog on X. And that's your Bloomberg Brief. John.
Amazing. Danny, thank you. Appreciate this morning. We'll catch up with you tomorrow morning. Up next on the program, setting you up for the day ahead from New York. You're watching Bloomberg Surveillance.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Or other authorities.
Could face bigger challenges next.
It was going to keep winning the World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
We are counting you down to the opening bell, about 40 minutes away, with equity futures just about positive. Your trading diary for the week ahead is absolutely packed. Give me a while. ISM manufacturing coming up at 10 a.m. Eastern, about an hour and 10 minutes away. Tuesday, JOLTS data, plus Fed Chair Jay Powell speaking from the ECB Forum in Sintra, Portugal. Wednesday, another round of jobless claims and tons more economic data. Thursday, remember, US markets were, of course, closed for the 4th of July holiday, plus the UK holding its first national election in about 5 years. And finally, on Friday, you get the June payrolls report. But before we get to the end of the week, President Joe Biden looking to ease donor concerns with another campaign reception tomorrow. Bloomberg's Mario Parker joins us now from Washington for a whole lot more. Mario, great to catch up with you, sir. Can you just walk us through what we're hearing from people at these campaigns versus what we heard from people after Thursday night?
Well, right now, what you're seeing is a little bit, and I use the term little very relatively, a little bit more calm right after a few days of the voters and the party being able to digest what happened, but also a very aggressive campaign from President Joe Biden's camp to try to tamp down some of these vocal cries for and vocal calls for the party, from the party for him to step aside.
The CBS YouGov polling is pretty dreadful. The question, I can share it with our audience again, does the president have the cognitive health to serve as president? For only 27% of registered voters in this poll to say yes, I just wonder how they respond to this, Mario, because that number has got worse, not better.
Absolutely, it's pretty brutal, right? And this is one of the first polls that's out post-debate. What we expect is just an avalanche of polling later on this week, right? A lot of the polling is in the field currently. We're not sure what it's going to look like, but there's a good chance that it'll look pretty brutal, and then re-up some of these deafening calls from the party to probably push aside President Joe Biden. The campaign has been very defiant. It hasn't changed course, which may be questionable on its nose as well. It's just saying that deriding some of the public comments from officials who have said that the president should step aside, particularly taking aim at former Trump officials who have podcasts, trying to laugh this off on social media as well, and then saying that the family is staunchly in the president's corner and calling for him to continue on.
Is there a sense of how it would work or who would be chosen if President Biden does choose to step aside, given the fact that there's a real kind of groundswell of feeling that maybe Kamala Harris has to be the person who's put in there, even though there's sort of an understanding that it's highly unlikely that she would ever win an election?
This is the can of worms, right? This is the can of worms that faces the party right now. Procedurally, parliamentarian rules say that it's very hard. It's not insurmountable. Go next month. He's got the delegates from the primaries. It'll be tough. There's a tough pathway to do that, right, on its face. Secondly, on the other track, which you kind of alluded to, Lisa, is just the wounds and the can of worms that it would open up within the Democratic Party, the infighting just months before the election, the polls that show that Kamala Harris wouldn't be as strong against former President Donald Trump as other candidates, the jockeying to see who would have the torch from President Biden. All those things will cause just a flurry of infighting, embarrassing infighting within the party, just as it needs to coalesce and gain momentum here heading towards November.
It's going to take some time to shake this off, that's for sure, if they can. Mario, thank you, sir. Mario Parker of Bloomberg down in Washington, D.C. Been through the week ahead, absolutely stacked. The program is too. Tomorrow, here's the lineup for you. We'll catch up with the former Fed economist, Claudia Sahm. Looking forward to that. John Stolfus of Oppenheimer will be joining us. Matt Miskin of John Hancock and BMO's Ian Lincoln. With BMO's Ian Lincoln, we've got to talk about these bond market calls coming out of this program this morning.
Given the fact that basically people are saying that yields are headed higher, regardless of what the Fed does. Krishna Mamani was saying that basically the Fed is being de-emphasized by the top politics of the moment because essentially you have to factor in a greater likelihood of a Republican sweep and the policies that would get enacted as a result.
What do you make of this call, this two-part story? Short-term inflation spike, long-term hit to growth.
It makes sense logically. The problem is, and this is something people are wrapping their heads around, nothing happens in a vacuum. If the bond market sells off, does it prompt a policy response? Does it have a self-fulfilling feature where it crashes something in the short term? There's a lot of unknowns here that are hard to extrapolate out. Either way, more volatility and potentially higher yields in the near term seems to be the most likely call going forward.
Quite a finish to Q2, quite a start to Q3. The first half is over, the second half still to come. From New York City, this was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world, and have been for many years, as most other similar businesses are, into dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
From New York City, for our viewers worldwide, I'm Matt Miller. A lot of uncertainty around elections could cause some volatility. The countdown to the open starts right now. Coming up, a busy week ahead with Powell speaking tomorrow and the jobs report on Friday. Politics propelling markets with results out of France and uncertainty here in the U.S. Plus, Boeing buying back Spirit Aerosystems in an all-stock deal after 2 decades of separation. We begin, though, with the big issue, stocks kicking off the second half of the year on a positive note.
Now we're at a point where it's really multiple expansion that's boosting names like NVIDIA, like Amazon. And so the question is, how much can that sustain, mostly as the earnings growth rate for the Magnificent Seven decelerates significantly into 25? There's room for downside surprise in earnings.
Joining us now is Emily Bowersock-Hill, Bowersock Capital Partners CEO and founding partner. And Emily, it's great to have you on, consistently ranked one of the top female fund managers and serving on the Kansas public employee retirement system. So you have a lot of experience on Wall Street. And what we're seeing right now is just new high after new high. Mostly, it seems, propelled by one company or maybe 7 if you look at it broadly. Does that does that encourage conviction for you?
I think one of the things we've been seeing in the market is a massive returns to scale. The Mag 7 are incredibly profitable companies with a lot of cash on their balance sheet. And frankly, governments around the world, particularly in the US, their ability to regulate has been neutered. So I expect that scale to continue. It's not surprising that they're continuing to rise in value. And frankly, I expect that momentum to continue. I do not think we are in bubble territory the way we were in 2000. These companies actually have earnings, and companies are being punished when they don't come out with earnings that are sufficient for, to justify the price. So I don't think we're, again, in bubble territory. I do think the valuation of companies like NVIDIA has gotten a little bit ridiculous. So I think people should expect short-term corrections, but in some of these stocks. But for the long term, I think that's, quite frankly, we would at least veer towards mega cap companies with a lot of scale and a lot of cash.
Yeah, Torsten Slok writing over the weekend that 35% of the S&P 500 is 10 companies, but they only have 23% of the earnings. Do you expect you know, the remaining 490 to backfill what we've seen with the top 10?
You know, I think so, and here's why I think so. I would argue that the possibility that we are going into a roaring 20s, similar to what we saw after the flu pandemic in 1919, is becoming increasingly possible. And when you have something like a pandemic in society, it touches off a wave of innovation. We had to change the way we lived. We had to change the way we worked. We saw an incredibly rapid change in technology and in the use of technology. And I think the next 5 to 10 years, that will bear fruit. You know, we're going to see the benefits of that. And unfortunately, or fortunately, depending on how you look at it, I think a lot of those are going to accrue to these mega cap companies with cash and scale. But I do think that that tide, in this case, is going to lift most boats. You know, for companies that are continuing to expand margins, we're out of the profit recession. The benefits of AI and of this innovation will begin to spread across other sectors of the economy, especially healthcare and industrials.
All right, well, certainly the Fed is watching AI and its effects closely, and a big week for the Fed with Chair Powell speaking tomorrow, jobs data coming out on Friday. I want to get over to Michael McKee, our chief economics and policy correspondent, for what to expect. Mike?
Well, it is the first week of the month, which means a lot of data. We cram a holiday in there, which makes it even more complicated. Today, we get some manufacturing numbers, S&P manufacturing PMI and the ISM manufacturing numbers. The narrative has been the economy is slowing, and the ISM has been below 50 for quite some time. Does it go back over and interrupt that narrative, or does the same continue? We'll find out. Tomorrow, Jay Powell, first time out of 4 times he speaks this month, along with Christine Lagarde, who is, of course, the French president of the ECB. So politics overhanging that as well. Jolts as well on Tuesday. Wednesday, jobless claims, ADP, ISM services. John Williams is speaking, and Fed minutes. Those of you on trading desks have to delay your departure for the Hamptons or the Jersey Shore by about 10 or 15 minutes. Thursday, Matt will be out tooling around in his sports car, and the rest of us will be maybe cooking some hot dogs on the grill. Friday, June jobs, and even though a lot of people are going to be off, we may get some volatility that day in the markets, but that's going to be important to the Fed. They want to see, again, is the economy slowing? You know, I mentioned that this is the first of 4 for Jay Powell this month. He comes out next week with his Humphrey Hawkins testimony, 2 days on Capitol Hill. The week after that, he's interviewed at the Economic Club of Washington, and then July 31st is that Fed meeting with his press conference. So you're not going to have to figure out what the Fed is thinking. He's going to be around a lot to tell you. What the markets are thinking right now is a greater possibility that we get a September rate cut and perhaps 2 by the end of the year. We're moving in that direction. We shall see at the end of this week whether the data pushes one way or another. You know, Matt, I was thinking Emily's right about the productivity in the 1920s. It really went up a lot as technology came in there. The question is, do we have the roaring 20s come back? I'm going to watch and see. When you put on spats, we'll know.
I'm ready. I'm ready. And by the way, I am currently testing out C8 Corvette E-Ray, which is like the perfect 4th of July sports car. 650 horsepower, 0 to 60 in 2.5 seconds.
It looks great. I saw the picture. I just wonder where the kiddie seats go.
No kids. No kids in this car. Michael McKee, thanks very much for that. We'll be watching the economic data closely, and of course, big releases out at 9:45 and 10 o'clock, and we'll bring them to you live. Emily Bowersock-Hill of Bowersock Capital still with us. And Emily, I have a viewer writing in to ask about stocks this year. He says, we're in the second half, so it's a good time to ask, where will stocks finish this year? What's your take?
I'm so glad you asked that question. I think, frankly, as long as there's some risks to my thesis here, but I would expect the momentum to continue over the next 6 months or so. You know, frankly, it's this frenzy over AI, I think, has legs, and I think it's despite the fact that some of these stocks are overvalued in the short term, this is going to be a bonanza for companies at the forefront. And frankly, I do think the Fed will cut rates once. They've become very adept at signaling what they are going to do. And I think we should believe them. I would expect a rate cut either in September or later in the fall. And I do think the risks to this are a few. First of all, we obviously have heightened geopolitical risks. We have a war in the Middle East, in Ukraine. We've got increasing trade tensions with China. And frankly, I would consider rising populism around the world to be a significant risk to markets. So, for example, in this country, unlike in 2016 when the market viewed a Trump election as positive for markets, I don't expect that to be the reaction if Trump is elected this time around. And the reason for that is that he's threatening to deport millions of immigrants, 80 million immigrants, and he's saying that he would put 60% tariffs on goods coming into China from China and 10% on other goods. And I probably don't need to tell the audience here that tariffs and deporting immigrants are both highly inflationary. I think if we hadn't had the number of immigrants coming into this economy that we've had in the last year or two, we would have an even tighter labor market, and we would likely have wages that were continuing to rise. So, we'll see, but I do think that's a risk to my thesis. As long as we don't have one of those geopolitical risks come into play, I would expect this upward momentum to continue.
Is there another side of that Trump coin, though, Emily? Because you would expect Trump also to decrease regulation. We saw the Chevron decision from the Supreme Court last week. You also have tax cuts that would stay in place, at least for the wealthy and large corporations. And then, of course, there is the fact that he doesn't always deliver on these campaign promises, right? In 2016, he said he was going to build a wall and have Mexico pay for it. Those things didn't happen. So maybe it's just, talk in terms of the deportations and the big tariffs.
I would suggest that people listen to what he's saying this time around, because the kind of people that are going to go to Washington with him if he becomes president are very different than the team that he took with him in 2016. I think you're absolutely right that the primary reason that the market reacted positively in 2016 was deregulation and the promise of lower taxes. So I think at this point, the market doesn't really, as we all know, like uncertainty. And his rhetoric has become increasingly unhinged over the last few years. So I don't expect that kind of excitement over deregulation. Do I expect the market to crash, if Trump is elected? Certainly not. I think we will just see more volatility because his rhetoric, if he even attempts to put some of these policies in place, would be enough to cause significant disruption.
Can I ask about NVIDIA specifically? I mean, only because you mentioned the valuation in your notes, in the notes that I've got for you, saying that, it's gone too far too fast. The rich valuation, I think ludicrous is the word you used there. Would you bet against NVIDIA even though you're bullish on the rest of the market?
Okay, absolutely not. First of all, as of last week, NVIDIA had corrected about 13%. I'm not sure exactly where it is at the moment. But we're suggesting to clients that they let some of these mega cap growth winners, including NVIDIA, run. As long as you're a patient investor, I have a lot of confidence in that business model and that it's an incredibly successful company. And one of the reasons the price keeps rising is that they're coming out with earnings that just blow everybody away. So I think the main argument is that in the short term, NVIDIA is wildly overpriced. But that doesn't mean that, we know that doesn't work. To sell NVIDIA, pay your capital gains tax and then try to find the perfect time to get back in. If you own it, hang on to it.
All right, and I guess that goes for the rest of the winners as well, right? You're not saying take profits and use those to fund purchases elsewhere in the market, but hold on to your winners and then look for a broadening.
Yes, that is what I'm suggesting. I wouldn't chase these returns. So if you aren't tilted towards mega cap growth, including NVIDIA, I probably wouldn't pile in now because it's natural. And I do think, while I'm not as concerned about the breadth of the market as some other people, I do think there's a little bit of a risk, more than a little bit of a risk, that if a company like NVIDIA or some of these high flyers were to correct significantly, it would pull the rest of the market down with them. And so I think it's just a question of when that would happen.
I wonder, by the way, Emily, how you're putting technology to work at Bowersock Capital. You've had a pretty illustrious career from Yale to McKinsey to Morgan Stanley and now at your own shop there. And you seem very bullish. AI, how can you use technology in your business?
That is a really good question. One of the things we're starting to do is to have AI take notes for our meetings. They're not perfect yet, but I think getting that process into place, that actually takes my team, a fair amount of time to organize and write out notes. I think it's going to provide a boost to productivity. But on that note, I do want to say, when I say that I think it's possible we're going into another roaring 20s, I think it's possible. I would give that, a 50% likelihood. I think the chances of it are rising. I do think that geopolitical risks are highly elevated. And I think some of these geopolitical risks, I didn't mention climate change, for example, are inflationary and would make it difficult for the Fed to cut rates. So there are all sorts of things that would go wrong. But in general, I am not, telling my clients, I'm not suggesting to my clients that they drastically pare back their mega cap growth stocks and tech stocks that have been the big winners in their portfolios.
All right, great getting some time with you. Hope we can get you back on. Emily Bowersock-Hill there of Bowersock Capital. Joining us now with a look at some of the individual movers ahead of the opening bell, here's Abigail Doolittle. Abby?
Let's start out with a flashy stock this morning, Matt, and that is Chewy. Shares are up more than 10% after Roaring Kitty, also known as Keith Gill, disclosed a $245 million stake in the shares. That's a roughly $9 million stake filed with the SEC. It's a passive stake. Off of the highs, though, at the highs, this stock had been up 30%. And if you recall last week on that meme of a cartoon dog, at one point on an intraday basis, the stock had gone up 40%. Turning to some other movers on the morning, some big ones. We do have the shares of Tesla trading higher ahead of their EV delivery numbers out for the second quarter. Out tomorrow, expected to come in at a little more than 441,000 EVs delivered. NIO up 4.6% after a strong delivery report. They delivered more than 21,000 cars in the last quarter, ahead of what had been expected and also showing growth. We have Spirit AeroSystems up 4%. You were mentioning that Boeing did buy back a part of the company in an all-stock deal. In addition, Airbus buying aircraft-related businesses. That was expected to happen but wasn't known. And then finally, we started off on Chewy. Let's end on GameStop, down 6.5%, because that same Roaring Kitty, or Keith Gill, is accused of a quote-unquote pump and dump scheme in another class action lawsuit. Plus, Matt, investors may be worried that he's taking his attention away from GameStop and putting it toward Chewy.
If showing just one meme picture of yourself at a computer is a pump, I think a lot of people should be worried. Abigail Doolittle, thanks very much for that. Coming up, Boeing agrees to buy back Spirit AeroSystems in an all-stock deal worth nearly $5 billion. We'll bring you the details on that deal next. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
This is Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rate while this is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
All right, the 20-year separation is over. Boeing agreeing to buy back Spirit Aerosystems in an all-stock deal valued at $4.7 billion. That doesn't include the debt. The total transaction is more than $8 billion. This comes as the DOJ is preparing to slap criminal fraud charges on Boeing. For all things airplane, we're joined by Sid Phillip, Bloomberg's deputy team leader and senior reporter for global aviation. So, Sid, tell us first off about this deal. You know, it was widely telegraphed. We knew there was some kind of combination that was going to happen. So what's it look like now that the details are final?
Morning, Matt. So yeah, Boeing is in the midst of taking over its former unit Spirit, and they've said that they'll pay for over $4.6 billion, and essentially they will try and complete this deal by mid-2025 is the timeline that they've set. And as part of the deal, Spirit is also getting rid of its Airbus-related businesses. And for that, Airbus will pay the princely sum of $1, and they will actually, in fact, get money from Spirit of $559 million. And so it is a good deal for Airbus in terms of being able to secure their supply chain at a time when they're struggling with their supply chain. It's also it's a homecoming for Boeing, and they can bring back a former unit that has been the source of a lot of quality issues for them, and they can bring it back into their fold and try and be able to turn that around and make sure that they can be aligned on the same quality issues.
So essentially, Sid, they need to do better, Boeing does, and one of the ways they're going to try and do that is pay, what, $8.3 billion to get Spirit back into the fold. Still, it looks like the U.S. Department of Justice is going to charge Boeing with criminal fraud after finding that they violated a deferred prosecution agreement. What do we know about that?
Yeah, so Bloomberg News reported late on Sunday that essentially the DOJ is leaning towards basically finding Boeing guilty, asking Boeing to take a deal that would basically have them plead guilty to corporate fraud, and they would also that would basically put them under pressure in terms of government contracting and other things. But at the same time, the alternative is for Boeing to actually face a trial, and that could be more damaging, especially for a company that's trying to turn around and trying to get their business afloat again and try and earn cash again.
It doesn't really look like Boeing has taken that much of a hit, Sid, in terms of its stock price. Right now we're trading at 182. Okay, we've been a little bit higher than 150 right at the start of the year, or rather the end of 2023, but it's been hovering around this price for the past 3 or 4 years. At what point do investors say they've lost enough that I can go in and buy this with some certainty?
It's always tricky with Boeing. I mean, every time you think they've turned around another corner, something else hits them. And so it's been a really difficult period for Boeing. And the company has been trying to move along in terms of just getting their stuff together, in terms of quality, in terms of getting new management in. They've been talking about how they want to ramp up deliveries again from when the FAA allows them to. So they've got a lot of issues that they need to resolve at the moment, and they're in that consolidation phase where they're trying to try and assess the issues and work through them. And so it's going to be a bumpy time for Boeing, at least for the next couple of months, until they can get deliveries back on track and smooth sailing ahead.
It's obviously an industry with very long lead times. Does any of this give Airbus an advantage? The problems that Boeing's been having for the past few years, does it mean that, you know, airlines are more likely to order Airbus aircraft instead of Boeing's?
Not really. So Airbus has been struggling with its own supply chain gremlins. And I mean, they're sold out to the end of the decade on their A320, which is the Boeing 737 MAX competitor. And they've been sort of cutting their forecast for the year. I mean, Airbus cut their delivery target for 2024 to 770 from 800 just last week. And they've been talking about how the supply chain isn't improving, it's actually getting worse. So at the moment, Airbus isn't able to cash in on any of this, and they're struggling with their own issues. And so as a result, airlines are sort of stuck between sort of waiting for new planes or just flying older aircraft.
All right, Sid, thanks very much. Always great to talk to you. Sid Phillip, one of our foremost experts on aircraft and airlines. They're coming to us out of London. Coming up, the morning calls, and then later, Stuart Kaiser, City Head of U.S. Equity Trading Strategy, joins us. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, UBS is upgrading Birkenstock to buy and raising its price target on the footwear maker to a street high. The analyst says the company can achieve stronger sales and margins over the long term. Next up, Goldman Sachs is raising Intercontinental Exchange to a buy. The firm sees the company's earnings growth inflecting, supported by structural tailwinds and global leadership in energy markets. Finally, Goldman Sachs initiating coverage on T-Mobile with a buy rating. The analyst says the U.S. telecom industry is in a state of transformation and sees wireless operators entering a period where both competitive intensity and capital intensity are moderating simultaneously.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors, including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
We've got a toga party on the New York Stock Exchange, kicking off the quarter and the half. Toga is ringing the bell over at the NASDAQ Breakthrough T1D. They're ringing the bell. We have gains in futures, so it looks like we could kick it off on a positive note. One of the stocks that we're going to be watching at the open is Chewy, but I'll get to that in just 1 second. It's an unbelievable story. Let's take a look at some of the other assets that are important to traders here. The euro dollar at 107.5, even after the far right took 33% of the vote in France over the weekend. There's still another round of voting to come, but we're still hanging there and haven't really moved from this band of trading for the euro dollar. The 10-year yield at 4.45 and NYMEX crude right now about 60 cents a barrel to 82.15. One of the stocks that we're watching at the open, as I said, is Chewy. An amazing story here. The online pet supplier soaring after Keith Gill, Roaring Kitty, disclosed a $245 million stake in that company. At 6.6% of the company, Bloomberg's Abigail Doolittle joins us now for more. Abby?
This is certainly a fun one, Matt. And of course, it started last week when Keith Gill, also known as Roaring Kitty on X, posted a picture of a cartoon dog. Now, on that cartoon dog meme, the stock went from being down on the day to up more than 30%. On the close, it closed up just slightly. The day after, down a little bit. So investors not quite sure, but you can see the excitement that he created from the original meme factor back in 2020, 2021 into stocks today. So the stock right now up about 7% off of its highs in the morning today. In the pre-market, up about 30% on the disclosure of this $245 million passive stake, about 6.6%, as you said, or 9 million shares. Folks perhaps not quite knowing what to make of this. Plus, it should be noted, there is a roughly 18% short interest on this stock. And Matt, I would be remiss if I didn't bring GameStop into the picture, because this stock down 6.7%. And this, of course, is where this is his bread and butter meme stock even this year, creating some big volatility on a meme of a man, presumably him or somebody else, leaning forward to play a game. That stock, as you have pointed out many times, had been a $10 stock. It is now, even though it's down on the day, a $23 stock. And it's interesting, Chewy had been a roughly $15 stock. It's now basically a $30 stock. One connecting factor, of course, Ryan Cohen had been the founder of Chewy and is the CEO of GameStop. More to come on this story, Matt.
It's interesting, Abigail. There are people, you say, suspecting that Keith Gill is taking part in a pump and dump scheme, or he put that together, but all he did was post a picture of a person playing a video game, right? Or show that he owns a stake passive or not.
Yes, in fact, that is the case. There is a class action lawsuit out there accusing him of a pump and dump scheme in GameStop. A lot of money was made and lost at the highs GameStop. I think on the April-May moves had made it up to 60 or 70. They will, of course, have to prove that, and you would think that the SEC perhaps becomes involved in this. I think some of this goes back to the 2021 when that original meme rally happened. It was this sense of the retail investor taking on the institutional investor, a real sense of moral camaraderie, whereas now I think folks are a little bit less certain in terms of what's going on here, and that maybe something is amiss. We don't know that that's the case, but there seems to be a sentiment among some of the sources on Wall Street that I talked to about it. And frankly, when you do see a stock go up 40% intraday on the picture of a dog being posted on X, you do wonder.
Yeah. All right, Abigail, thanks very much. Abigail Doolittle, I doubt that's the last we'll be talking about that. Boeing has agreed to buy Spirit AeroSystems in an all-stock deal. Bloomberg's Simone Foxman is here with more on this. We finally get the details of the Boeing Spirit deal.
Yeah, that's right. This deal worth $4.7 billion. It's an all-stock deal. The total transaction value about double that, $8.3 billion, and that includes Spirit AeroSystems net debt. But Matt, as you mentioned, this is a deal we know has been in the pipeline for a long time. For Spirit AeroSystems, this is a 30% premium to that February 29th closing price. That was when both companies confirmed that there were deal talks in the mix. This will likely close in the middle of next year. This is a complicated transaction too, because Airbus is actually going to buy some parts of the company that make components for its aircraft. But it's something that comes at a time...
For $1.
For $1.
And actually get paid like almost $600 million.
Yeah.
That's the kind of buy I want to be making, you know?
Yeah, but you know, I mean, for Spirit AeroSystems, which has been challenged, and for Boeing, of course, this is something regulators are expected to really welcome here, because it comes just hours after we got the news that the U.S. Justice Department, according to Bloomberg sources, is going to charge the company with criminal fraud for violating a 2021 deferred prosecution agreement tied to those fatal crashes about 5 years ago. The company now has to decide whether it's going to plead guilty or it's going to go to trial. If it pleads guilty, that has a real impact on potentially its government contracts. Nick Cunningham, an analyst at Agency Partners in London, says the DOJ charge, either way, this is a terrible outcome for Boeing, and he doesn't like the deal either. He says Boeing gains very little from this transaction, but essentially kind of forced into this map.
All right, Simone, thanks very much. Bloomberg's Simone Foxman talking to us about the Boeing deal. Now let's talk Tesla. Shares higher ahead of its second quarter delivery numbers out tomorrow. For more, we're joined by Craig Trudell, Bloomberg's Global Autos editor. And Craig, I remember a time when these numbers were just higher and higher and higher every quarter, and now we're looking for a drop.
Yeah, not only that, a second consecutive year-over-year decline. We haven't seen that since this company was phasing out the Roadster, its very first vehicle that it put out on the market. And so this is incredibly rare for the company. As we've seen just in the last couple of weeks, though, there is sort of a willingness on the part of some investors to look beyond these quarterly results and the prolonged sales slump that we're seeing from the company, and get excited about some of the various things that Musk has been talking about of late. He's really hyped the prospects for the humanoid robot that Tesla is working on, and of course we know that he's scheduled an unveiling for a dedicated robo-taxi in August. And so there does seem to be quite a bit of sort of speculation building for both of those products, and that seems to be flowing into the stock, which is still before today was down 20% for the year.
I had a drive in a Tesla Roadster back in 2010. That was my first ever experience with range anxiety. Last week I ran a GMC Hummer down to 0 miles and 0% battery. My own fault, because that thing has a lot of range. But in terms of EV demand, Craig, have we seen globally a drop for full BEV demand? Are people globally shifting to hybrids or back to gas?
We're seeing quite a bit of momentum for hybrids and plug-in hybrids, even doing extremely well in China of all places. People generally view China as sort of on the leading edge for battery electric vehicles, and rightly so. They sell quite a bit more than any other country in the world. But in terms of plug-in hybrids, globally, just in the last few years, the compound annualized growth rate for plug-in hybrids has actually been better than battery electric vehicles. So we have seen some manufacturers really dial back their plans. We've heard Mercedes talk about that recently and have a great story out on the terminal today about that. But this is pretty much across the board, whether it's GM or Ford. Again, Mercedes, quite a few manufacturers that just a few years ago were talking about roughly when they would be able to phase out the combustion engine, really sort of saying plainly that the combustion car still has quite a bit left in the tank, if you will.
I like the pun. Craig, thanks so much for joining us. Craig Trudell there, our global auto czar, giving a shout out to Chris Ralvald and Elizabeth Behrman, who wrote that Mercedes story. Check it out on the terminal. MBGGY is the ticker. Joining us now is Stuart Kaiser, head of U.S. equity trading strategy at Citi. And Stuart, first of all, thanks very much for coming in. Appreciate you joining us on the first day of the new quarter, first day of the new half. We're up in terms of futures. Do you expect we'll hit new records again this year?
Yeah, I mean, that's our view. We still remain pretty constructive on U.S. equities. 2Q, I'd call probably a 6 out of 10 from an equity perspective. I think it actually felt better for most people because we rallied so hard off of those April lows. But big picture, you're up about 3.9%. Solid outperformance in both bonds and commodities. And in our view, you kind of continue to run long equity risk as long as that U.S. labor market stays strong. And we're going to get a tremendous amount of data on that this week. So that's our view is to remain long. And we'll probably have to update that over the course of the next few days.
I think the expectation is for 195,000 jobs on Friday. Is that enough? I mean, do we keep running at that pace?
I think anything over 150 is probably enough to support the rally. I think if you're printing 190 plus with an unemployment rate of about 4%, which is the consensus view, that should keep equities moving higher. Obviously, earnings starting end of next week with the large cap banks, so that's going to be sort of the next test for markets is how higher expectations going into the earnings season. But yeah, I think if you're printing 190K jobs, equities will do just fine in that environment.
Well, in earnings, I mean, I was talking earlier about Torsten Slok sent a note yesterday, I think, showing that the top 10 companies in the S&P are worth 35% of the market cap and only 23% of the earnings. And if you take out the Mag 7, right, we don't see the earnings expansion that everybody's been raving about the last few quarters. The 493 are still contracting, or at least they were.
Yeah, I think on a forecast basis, the 493 will probably be up mid-single digits from an EPS growth perspective. So it's not horrible on that end, but it's not the double-digit earnings growth that's propelling the market. Agree with the concentration both in returns and market cap. Our pushback against that is that's kind of normal for U.S. equity markets. If you're going to pull out the Mag 7 today, then you have to go back and pull out GE in the 90s and IBM in the 80s, et cetera. I mean, generally there's a theme or a group of stocks that are driving the growth in the market, and that's the case today. It might be a little extra. Right now, but I don't think it's healthy to kind of back out of the markets because the innovative stocks are generating too much return. So
Emily Bowers-Hill was on earlier saying the rich valuation of NVIDIA was ludicrous. That was the word she used. But still, she's not going to sell that stock, right? I mean, you think investors should buy the Qs now?
Yeah, we do. I mean, part of that seasonals. For some odd reason over the last 20 years, the Qs do great in July. Probably, that centers around the strong earnings growth. And we do like upside in Qs, at least tactically for kind of the next 1 to 3 months. In terms of valuation, look, valuation to us is potential energy. So, yeah, it is a relatively expensive stock, but that's only going to matter if something releases that potential energy, i.e. you're going to need to see disappointment on the fundamental side for NVIDIA. So I think unless you anticipate that fundamental disappointment in the near term, then the valuation necessarily shouldn't be your concern in our view.
What about the losers? I mean, Tesla, I'm looking at the description page, down 18% year to date, still worth $650 billion, so like all of the other car makers combined. But look, we're expecting, as Craig Trudell just told us, a 5.5% drop in deliveries tomorrow. What's your outlook?
Yeah, I think I agree with what Craig said. This is yourself too. This is a laggard stock year to date. You have 3 pretty important catalysts coming up in deliveries, then earnings, and then followed by the robotaxi day in early August. Our view is with the stock trading where it is, those events are probably underpriced, and we do like owning some upside in Tesla either through the shares or through call options. So this is kind of a view of, to your point, still a very popular, strong stock, has materially underperformed year to date, and we do think those 3 events, as Craig detailed, are probably going to shift sentiment a little bit positive.
I like to buy cars. I don't have enough money to buy the cars that I want, so I typically end up borrowing money to fund my addiction. Right now, it's very expensive with rates where they are. Do you expect the Fed to cut rates? Does that need to happen for the economy to continue growing, for the market to go up?
We don't think rate cuts are necessary for the market to go up. I actually think if the Fed is forced to cut rates because of slowing economic growth, that's actually negative for the market. So, our view, our economist view, is you will get a couple cuts later this year as the economy continues to slow and inflation continues to come down. And look, I think your max bull case is you soft land and the Fed does a couple insurance cuts. And I think that is the situation where you get significant upside in equity markets. If we continue on the trend we've been on, which I would just characterize as higher for longer, is growth remains solid enough that the Fed can remain patient as inflation comes down. I think then the second half looks similar to the first half. Obviously, you have elections and some other stuff going on, but from an economic perspective, higher for longer isn't horrible for equity markets and is much better than a hard landing.
How do you trade around these elections? I mean, A, does it matter to you if Le Pen wins in France? Who even knows where that is, right? And B, after the debate on Thursday, if the Democrats keep Biden in place, does that mean you have to trade around a Trump win?
I think our view on the election, we view it as it's going to be a 50-50 toss-up going into Election Day. That's still our view. I know the odds moved a lot last week, but you saw a similar move in the odds back in 2020, and they ultimately kind of reverted almost back to where they had started. So, if you believe you're going to be 50-50, I think what you're trying to identify here is the key themes to trade around the election. And to me, corporate taxes is probably the cleanest way to trade the election because there's a clear policy divergence between the parties, and it's something that's easily identifiable and easy to trade. Tariffs are a little trickier. Both parties kind of are okay with tariffs, so I don't think there's as much divergence there in that space. And then you have some sector calls, and banks, I think, is the one that's been front and center for a lot of people. A lot of investors we talk to expect if Trump odds improve that is positive for the banking sector. You also got CCAR results last week. You also got what looks like a little bit of a rollback in Basel III that's supportive. So look, trading the election to us is a 50-50 shot. So you pick your theme, and we do think corporate taxes and banks are the ways to do it.
Stuart, great to get some time with you. Thanks so much for coming in. Stuart Kaiser there, head of U.S. equity trading strategy at Citi. Now, coming up, the Supreme Court is ready to rule on Trump's immunity over his criminal charges to overturn the election. We'll discuss the impact of that decision next. This is Bloomberg.
The names that move markets are on Bloomberg.
With all due respect and thoughts and empathy and sympathy for the people who are suffering at the moment, and there are plenty. It's not just Ukraine and Gaza, it's in many other corners of the world as well. But I'm constantly surprised by the level of resilience and the capacity to actually bounce back from those traumas. So I have faith in the human beings and their capacity to respond to adversity. We've seen it. Look, earlier in the pandemics, we thought that the world was coming to an end, right? It hasn't. Nobody thought that vaccines would come up in such a short period of time. And every time we have to constantly resurrect this spirit of resilience.
But are you hopeful that
I'm always hopeful. Come on, we have to be. We have to be.
Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Today, the U.S. Supreme Court will rule on former President Trump's claim that he's immune from criminal charges over attempts to overturn the 2020 election. Joining us now is the host of Wall Street Week, David Weston, who is also a lawyer, who also clerked for a Supreme Court justice, so you know of what you speak. What's the likely ruling that we're going to get from the Supreme Court?
Well, it's always tricky to judge based on the arguments, but if you looked at the arguments, you'd say basically they're going to remand it and say sometimes the president's immune, sometimes he's not. It depends on whether what he did was private or public, and the trial court can decide that. Based on the discussion and oral argument and some concessions, actually, from Donald Trump's lawyers, you'd guess that that's most likely outcome.
So anything that he did while he was president in his official capacity as commander-in-chief, you can't prosecute him for that criminally.
Yeah, but the tricky part is what is official capacity, because at the oral argument, his own lawyer conceded that things like actually knowingly fraudulently certifying an election or putting up a fake set of electors, that would be private, because that would not be his actions as a president, but as a candidate, and that's a private result. So it's not just anything he does as president. He actually might be held liable.
All right, so if they remand it, which I assume means kick it back down to a lower court, what does that mean for the cases that the DOJ has against Trump right now, especially ahead of the election in November?
Well, again, just judging from what the concessions were in oral argument and the questions from the bench, you'd say, well, they're just going to go back to the district court. They said that that's where it probably should go. And then they'll have to have a hearing and arguments, maybe even taking of evidence on what was public and what was private. There's an earlier case, a civil case against Donald Trump that's already gone through some of this process. And right now they're going through discovery at the district court to figure out exactly, did he use money from the government? Where was he? Things like that. So this could be a more extended process. And that does raise the question, if in fact he's reelected us for a second term as president, what happens to the case?
All right, David, so, I mean, this is very complicated stuff, especially for a non-lawyer to understand, but not as complicated as, when I hear the term Chevron doctrine, I have no idea what that means. And yet I hear the Supreme Court overturned it last week, and it's incredibly important to, especially markets.
Yeah, I think this is a real sleeper, Matt. People have not been paying attention, and particularly, I'm not sure the business community has been paying enough attention to this. This has been a multi-year process through the judiciary as well as under Donald Trump and his prior administration to really attack the Chevron doctrine. What it says basically is when it comes to a regulatory agency, the courts will defer to their interpretation of the statute that gives them authority unless they're really off the rails. They'll really go along with the regulatory agency. The Supreme Court now this term has said no longer. The courts get to decide it from the start, decide whether that makes sense under the statute or not, which is overall thought to be a curtailment of the regulatory authority that's imposed on business. It really is a big decision.
And it's been, as you say, something that's brewing, not just this decision, but a number of other decisions. Does Congress have to do something about this if they want to turn around? Could Congress say, hey, listen, when we delegate authority to the EPA, we really want the EPA to make those decisions?
Well, as we used to say, ought implies can. When you say, does it have to? The question is, can it? I mean, Congress can't do much of anything, it seems like, these days. But there was another decision, actually, out of the Supreme Court about the SEC and use of administrative law judges and imposing fines, saying, no, you can't do that. You got to go to court. So there have been a series of decisions here that really have said, we're not going to have as much regulatory authority over corporations as we have in the past. That's where it's tending.
All right. David Weston, thanks very much. He is, of course, the host of Wall Street Week. You can catch that Fridays at 6, but you can see him all throughout the day on Bloomberg Television. Breaking news here, the Washington Post reports that the FTC has opened an investigation into Teva Pharmaceuticals. Bloomberg's Abigail Doolittle has the details on that. Abby?
On those headlines, Matt, we do have the stock down about 1%. At the lows, down about 2%. This after having climbed right after the open nearly 2%. So basically a 4% intraday move on these headlines. And the FTC, as you mentioned, has opened an investigation, according to the Washington Post, into Teva Pharmaceuticals, the Israeli generics company, citing the company's refusal to take down about 24 patents for some of its asthma and other inhalers. The company has until July 24th to cooperate with the FTC's demand. More on this story, but right now investors down, taking the shares down 1.5% on the uncertainty of what's ahead. If we take a look at what's happening for the S&P 500, a little more certainty there. Not much. We have the S&P 500 up fractionally, but it's a broad-based gain, Matt. We have energy up 1%. We also have utilities, healthcare, and financials all up 1%. A few of those sectors, as you know, though, defensive, so maybe that's not quite as bullish as it looks. To the downside, tech and communication services down both more than 0.5%. Those are those heavyweight mega cap tech sectors. So in some ways, it's going to be interesting to watch this day to see whether or not those big tech names, including NVIDIA, bring the markets down. Again, the S&P 500 right now up just fractionally.
All right, Abigail, thanks very much. Abigail Doolittle talking to us about the breaking news on Teva, and we are seeing the S&P pretty much unchanged. I mean, there's a green arrow. It's up 7/100ths, 8/100ths of 1%, but the NASDAQ is down 1/3%. The Dow Jones Industrial Average, if you care, up 300 and change. Coming up, the market-moving events you need to be watching. That's next in our Trading Diary. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Time now for the Trading Diary, what you need to be watching today and the rest of this week. We get May construction spending at the top of the hour. We also get June ISM manufacturing numbers. On Thursday, U.S. markets are closed for Independence Day, and the U.K. will be holding its first national election in 5 years. We close out the week on Friday with the U.S. jobs report, even though most people probably will be taking that as a bridge day for the long weekend. This was the Countdown to the Open. I'm Matt Miller. This is Bloomberg.
in recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. Alex Steele and Paul Sweeney here with you. It is Supreme Court Day. We're going to get some Supreme Court rulings, including the immunity case regarding former President Donald Trump. We'll have full coverage of that. We've got some Joe Matthew, co-host of Balance of Power. He's going to join us. Wendy Schuller, professor at Brown University. She's on call as well, so we'll break it all down when that does cross. We do have some ISM data coming out. Manufacturing data came out a little bit weaker than expected. We'll break that down. So we got a lot coming up in this first hour. We're going to be commercial free, I think, for the entire hour as we break down the Supreme Court rulings coming any minute right now. But let's kick things off as we do with Lisa Mateo and get a Bloomberg Business Flash. Lisa.
You got it. And Market Drivers brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. All right, more economic data coming out this morning. We'll start with S&P Global U.S. Manufacturing PMI for June. The survey was for 51.7, came in a tick lower at 51.6. Then we go on to construction spending for May. This is month over month. The survey was for 0.2%, came in down 0.1%. And then we go to ISM manufacturing for June. Let's see, the forecast 49.1, coming in a tick lower at 48.5. This week, we also have other major reports, including from the Labor Department. We have U.S. jobs report on Friday. The Fed also issuing minutes from its June policy meeting on top of that. And with all that said, let's get to your stocks right now. We have the NASDAQ, little changed, up about 13 points at 17,745. We have the Dow up about 0.5% at 234 points at 39,350. We have the S&P 500 up 0.1%, 10 points at 5,471. Want to get to the 2-year yield, 4.76%. That's little change. The yield on the 10-year, 4.43%, and that's up 3 basis points. European stocks, well, they snapped a 4-day losing streak. The euro stronger after French election results. So we have the stock 600 up 0.7%. Checking in with the euro, 1.0758 against a dollar. We have the British pound, 1.2691 against a dollar. That is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. Alex Steele here alongside Paul Sweeney. We are on Supreme Court watch. The big one, obviously, is going to be that immunity, the Trump immunity case. Also, though, we have about 3 other decisions to come out. The latest is that the Supreme Court allows a swipe fee challenge. This would be in a blow to regulators. This seems to be around the amount businesses pay banks when consumers use their debit card. We'll, of course, follow that over the next hour as well. All right, we're taking a look at the market plus that weaker ISM. I mean, weaker, but like prices paid were down, Paul.
Yep.
It
So
feels like a good thing.
A little bit on the inflation
Yeah,
front there. So.
You have some bond yields pairing some of their advance after the data. Tim Fiore is chair of the Institute for Supply Management, standing by on the data. All right, Tim, it's your stuff. Is this good? Is this bad? Does this make sense? Tell me.
No, it's pretty much the same as last month, Alex. You know, if you take the seasonal factors out, if you notice, the 5 that go into the PMI number are all really near 50, except for the inventory number. If you took the seasonal factors out, they would beat 50. So essentially, we're the same in June as we were back in May, which is okay. So let's talk a little bit more about what was good about this report and what was not so good. The good stuff, demand appears to be coming back a little bit. I'm not going to claim we've got it back, but it seems to be coming back, which is good. We got prices dropping again, very consistent with the PCE and the CPI that came out for May. This is now June. So we're saying price relaxing is going to continue in June, which you should pick that up in the PCE in a month or so from now. We've got suppliers that are getting close to having trouble in delivering on time, which we've been waiting for quite some time, which I think is good. And then we have the employment number, being stable. So we're not overhiring. We're not destaffing heavily. We're kind of sitting where we are last month, which is okay. The not so good stuff here is, as we warned last month, the production number has now come down. The seasonal kind of did that, but the seasonal is a valid thing. We've now had our first month in many months where production/revenue is actually coming down, which is bad. So, and the bad thing is that I think they're running out of work because the new order level has been so weak, and the backlog is now down to close to 40, which is the second bad thing for the month. So overall, we had 4 or so good things in the report, 2 not so good things, and it's pretty much the same as in May, which in May we said we were stable, stuck, stagnant, blah, blah, blah. So we're kind of still there. I think there's some minor movement in the indexes, but overall, we're still stuck.
When you talk to manufacturers out there, Tim, what do they tell you just anecdotally about their business?
Well, it's the unknown. I mean, they're waiting, as we mentioned last month, they're waiting for rate cuts. And in the meantime, people are not willing to invest either in working capital or in capital. Our 3 biggest industry sectors that are being impacted here, 2 of those are very capital intensive, fabricated metal products, as well as machinery. And this month, in the month of June, we also saw a takedown on the transportation equipment side, which has some longer term impacts if it stays down. It came in below 50, significantly below, but not 45 or so. So that's a big capital intensive area too. It seems to be coming back to people aren't willing to invest yet because of the unknown. So as time goes on, obviously we know more than what we knew today. But in the meantime, we're kind of sitting where we're at.
All right, Tim, thanks so much for joining us. Really appreciate it. Breaking it down for us. Tim Fiore, chair for the Institute for Supply Management, that's otherwise known as ISM. Market Drivers today is brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at IBKR/ RIA. Looking at these markets, green on the screen here, led by the Dow Jones Industrials, up 200 points. That's a 0.5%. Abigail Doolittle joins us here. She covers all the markets for Bloomberg. We appreciate getting some of her time. Abigail, what are you looking at today?
I'm looking at NVIDIA right now, down 1.9%. This, of course, after into today having fallen more than 10%. It seems like this consolidation of this AI chip stock is really coming off of those highs. But we have to remember on the year, still up more than 100%.
Yep.
So again, some trimming of positions. But the point to be watching there is sentiment. So I'm just pulling up a chart really quickly of NVIDIA to see if it's broken any trend lines, which suggests more selling. Because if that were to be the case, it would certainly weigh on the S&P 500 and the NASDAQ 100 as a major weighting. And just, again, the sentiment, the frothiness around some of these tech stocks. And in fact, it does appear as though it may be in a topping pattern. We don't know that for sure yet, but if NVIDIA were to go below 118, we're probably going to see this stock go significantly lower, basically to the levels that it had been at prior to its last quarter. And again, the significance of that would be the drag on, say, your Apples and your Microsofts and the other tech stocks, and not to mention Super Micro and ARM Holdings, AMD and such. So that one really stands out. Right now, though, the S&P 500 withstanding it, the NASDAQ just turned ever so slightly despite that.
So let's talk about some of the crazy ones. Chewy. Even GameStop. So the Chewy dog meme thing that was very short-lived was actually a thing. Like he did,
it was a thing. So in terms of what's happening here, so Keith Gill, also known as Roaring Kitty on X, has disclosed an official $245 million stake. That's a passive 6.6% stake in the company.
That's big.
Yeah, it's big. It's 9 million shares. Now, on this news coming out on in the pre-market, the stock had been up more than 30%. Now it's down 4.3%. This, of course, after last week he posted a meme of a cartoon dog. On an intraday basis, the stock basically moved 40%, actually more than that, because it basically retraced. So you could probably make the case that stock on the day last week when that dog meme came out, about a 70% move. I mean, it's really incredible. So there is a 17% short interest on this stock. So it seems as though maybe some of the shorts have gotten out. But we also have news on GameStop, and that's, of course, his original meme stock, Mania. And there's a class action pump and dump, quote unquote, pump and dump lawsuit against him for reasons that I was about to say are obvious. Maybe they're not obvious, but that stock had been a $10 stock. At one point, it was a nearly $65 stock. Right now, a $23 stock. A lot of money made and a lot of money lost. For the retail investor who should maybe not be trading in that volatility, perhaps some of them are part of this lawsuit. That stock right now down 5.5%. And of course, both of these companies are Ryan Cohen companies. So it's interesting to see this happen. I find the reversal in Chewy today from, again, up 30% in the pre-market to down 4% right now to be interesting, because to your point, Alex, it's real. He does have this stake, and there's disclosure around it. It's not something, we don't know if it, it's not a matter of is it over the counter or is it
so it's not just a screenshot of his account.
So quote unquote an account. This is real.
Right.
So to that point, I wonder if we're learning anything about the liquidity situation as well, because you're seeing Chewy down.
I think that's a great point, Alex, because that was one of the first things that came to mind for me last week. The fact that you could have a stock trade up on an intraday basis, 35, 40% on the meme of a cartoon dog, suggests that there's still a lot of animal spirits out there, that there's a lot of liquidity in the system. People feel comfortable enough to send a stock up just on a picture as opposed to fundamentals that are changing. Now, the assumption there would be that he would get involved in the way that he is now involved, but they didn't know that. There was no proof of that. So, investors just feeling very comfortable to trade in a somewhat risky way. Certainly not a real strategy there.
All right, thanks, Abigail. We super appreciate it. Thank you very much, Abigail Doolittle, joining us there. All right, let's get to one of the main events of the day. We are on Supreme Court watch. We're waiting for the decision from the Supreme Court on the Trump immunity case. Joe Matthew is co-anchor of Balance of Power, and he joins us now. They're still on the first case, Joe, but can you just walk us through what we're waiting for?
Yeah, this is the big one, the granddaddy of all rulings here, as we have waited to the very end of this term to find out where the court falls on presidential immunity. This is directly going to impact the future of Donald Trump's legal saga here, as we wait to find out if special counsel Jack Smith will ever actually have a trial on the January 6 charges ahead of the election. This will help to determine that, but also the future of the presidency, whether a president is in fact above the law. That is basically what we're talking about here today and what the Chief Justice described when they had oral arguments in April as a ruling for the ages. This could come in the next half hour or so. It could come at any moment, and we're going to be talking about this a lot.
Joe, you know, I'm looking at some of the Bloomberg reporting here, and one thing that caught my eye is the court's view may boil down to this. Was he acting as a president or as a private citizen? What's the difference there, I guess?
It is everything that has to do with this ruling. Donald Trump contends that his efforts to reverse the results of the election or investigate, as he says, election irregularities and fraud were part of his official duties as president as opposed to a private citizen. So when you think about directing the DOJ to pursue this aim, when you think about creating fake slates of electors or even making the phone call that he did to Georgia, calling secretaries of state around the country to find more votes, he said he did all of that in his official function as the president. In many cases, he was sitting in the Oval Office. So the court has to decide here whether we're talking about presidential immunity or Donald Trump's immunity as an individual.
What is the ability for this ruling, no matter which way it goes, to upend the presidential race? Like, what is that impact?
It's a great question, and it's hard to really get a sense of that now, especially with all the noise that we've had last week after the debate and the counterintuitive reaction that we saw to Donald Trump's 34 guilty verdicts in New York. The fact is, this ruling will help determine whether there's going to be a January 6 trial here in Washington, whether Donald Trump will be held accountable for his actions on January 6th, the 4 charges that have been brought forth by special counsel Jack Smith. If this gets kicked down to a lower court, or if they say the president is immune, which is not likely in this case, because that would mean he could do anything from the Oval Office, or she in the future, then we'll find out whether or not this is going to be a case that is tried in time for the election. If it gets kicked down to a lower court, that is highly unlikely, and it could mean the re-election of Donald Trump, is the eyes of many political viewers here.
So will there be, is the expectation that the court will rule firmly one way or the other, or is there a ruling that would kind of keep the case alive, which would then presumably also be a setback for former President Trump?
You're asking the right question. It is not likely that we get an up or down ruling on immunity. It's possible, but it's more likely that there will be a partial ruling on immunity, and they could pick through this with regard to what they see as official, as we mentioned, or personal when it comes to the actions of Donald Trump. Sorry, I'm in a bit of a noisy room here.
Yeah, we can.
No, we can hear it, Joe. We appreciate it. It's super hard to put that on. Thank you for bearing with us.
Trying to keep my head straight here. But look, when we're talking about the outcomes, it could in fact be a partial ruling or one that sends it back to the appellate court, which would take an enormous amount of time to then hold another hearing, bring forth evidence, and determine whether he was acting in his official duties as a president or not. That could be the rub here today. If that's what we find out in a minute, then you're probably not going to see a Jack Smith trial here in Washington, and it makes it potentially more likely that Donald Trump will win the White House.
Are we going to learn, or I guess, what do we learn about the politicalization or not about the Supreme Court? It feels like the spin on that can go either way.
Yeah, and it depends who you ask on this. Look, we've had a lot of 6-3 rulings, and there's a very good chance that we have another one here. Everyone knows that 3 of these justices were named, were nominated by Donald Trump, and we have seen them rule in his favor partially before, but in some cases we've seen split rulings, and I'll wait to see the numbers on this and try not to project, but no matter what the outcome is, you will see both sides point to politics if they don't like the way it went in their favor.
Joe, have we heard anything from the prosecutor, Jack Smith, recently?
He's been really quiet on purpose, and that is typically the job of a special counsel here. The fact of the matter is, though, his entire effort is riding on this ruling today because we're not likely to get the classified documents case in time for the election. And the other cases, we already saw the one in New York. Georgia is not tied to Jack Smith, but it's on the slow track right now. We might not even have the same prosecutor in that case. So this is basically the one shot that Jack Smith has to get Donald Trump in a courtroom to face federal charges. And by the way, it doesn't have to determine the outcome of the election. This is a dotted line. but knowing that that could make Donald Trump's life a lot more difficult if he were held accountable for his actions on January 6th. This is the political side of what we're discussing here.
Well, speaking about the political side, the rhetoric over the weekend after that disastrous debate was quite surprising. You had the surrogates, you have the Biden camp really forming ranks around President Biden. What was your takeaway over the last sort of 72 hours after a disastrous 90 minutes?
Some pretty loyal followers of Joe Biden. Look, there's the conversation that's being had quietly, and then there's the one that's being had out loud. Look no further than Jon Favreau, who used to be a speechwriter and advisor to Barack Obama, and he hosts a very popular podcast now. It kind of represents the zeitgeist when it comes to progressive Democratic politics. And he's been fighting with Biden advisors who are calling these guys bedwetters for being super upset and thinking the election is over after a single night. But I don't think we can underscore how important that was, what we saw on Thursday, and how much more of a hole Joe Biden has to dig out of here when it comes to the age issue. He was at Camp David over the weekend with family members, not just to talk about this. They were having their picture taken by Annie Leibovitz, actually. That's why they were up there, as it turns out. And the conversation that leaked to papers like the New York Times was one of blame. The family thinks that Joe Biden was not properly prepared, or, as they put it, over-prepared for this debate. They thought he had a great summer tan going, and he looked pretty pasty with the makeup, and they didn't think that he was treated fairly by many folks in the Democratic Party afterward. But look, this is a real problem for the Biden re-election campaign that was already dealing with the age issue, and they just made it worse.
And Joe, you know, it's over the weekend we had the New York Times, its editorial board, as well as Tom Friedman, one of the few reporters
within hours,
editorials that still speaking with President Biden, came out pretty vehemently against President Biden. How's that being taken by the campaign and the administration?
Not well. I mean, they're clapping back, which is why you saw Sunday morning TV loaded up with campaign surrogates and Biden allies. They had Wes Moore, the young governor of Maryland, out there. They had Chris Coons, the old friend of Joe Biden, and a lot of folks in between. Look, the question is, what will happen between now and the convention? And this is a conversation that could evolve. I really don't think that at this point Joe Biden's about to drop out of this race. But there are a lot of folks looking around the country right now to think about who might be able to take up that mantle if he did, and whether it is someone named Kamala Harris, because it's kind of interesting how people seem to talk past the vice president when it comes to this conversation.
All right, Joe, we appreciate it. Thank you for helping us drumbeat to this decision. Again, we are still waiting for the Supreme Court decision ruling on Trump's immunity as it relates to January 6th. Thank you so much. Wendy Schiller, professor at Brown University, also joins us. She's professor of political science, international and public affairs, pretty much all the stuff when it comes to anything in D.C. Professor, thank you for joining us. Lots of angles to go at from this. Let's just pick up where we were ended with Joe, and that's what we've seen over the last 72 hours in relation to the U.S. election. What is your take on how President Biden's campaign evolves over the next couple weeks?
Well, I mean, I think allaying concerns about the campaign decision-making and management to the largest donors and state party chairs, for example, and certainly incumbent senators running for re-election in swing states. Because if they cut loose, if they cut Biden loose, because they're running ahead of Biden in some of their races, like Sherrod Brown, Tammy Baldwin in Ohio and Wisconsin, respectively, if they all say, we're about to just talk about Trump and the issues and we're done, then I think the campaign has to really sit down and think, do you have the infrastructure now to go ahead? And I think concerns about judgment are flashbacks to Hillary Clinton's campaign, where certain decisions were made, not to go to Wisconsin, for example, in person, that were then, of course, in hindsight, criticized. So this is really about campaign style and campaign recovery. And it seems as though the Biden camp is quite insular, quite loyal to Biden, been with him for a very long time. And they're running into the Obama people, who are the ones that won the election twice. So I think the Democrats have to figure out this intra-family squabbling and do it very, very quickly.
Wendy, former President Obama came out on social supporting President Biden. How important was that?
Well, Paul, and Alex's point too about sort of where does everybody go from here? You know, it's pretty easy, as we all know, to type something on social media and then backtrack. I think in the end of the day, it'll be Jill Biden, Barack Obama, possibly even Bill Clinton. But who do you pick Joe Biden is not walking away and giving it, like I say, to Bernie Sanders, Elizabeth Warren, or Gavin Newsom. He's going to say, show me the proof somebody else can beat Donald Trump in swing states. And the only person that comes to mind that's ready is probably Gretchen Whitmer of Michigan, and it's a swing state they have to win. So I think that's the only scenario where I see President Biden actually saying, okay, I'll release my delegates to this one person who you think can do better than I can against Donald Trump.
We have some more news out of the Supreme Court. This is the second decision today. They issue a mixed decision on state local media laws. The court rules on Texas and Florida social media laws. They're sending it back now to the lower courts. This really evolves around how much say social media companies have over what is published on their site, and sort of pushing back against some rules that say you have to publish whatever people want to publish. It's an open forum for discourse, and then social media companies kind of pushing back on that, saying it is our right to filter it. So apparently it's a mixed result, and those laws are going back to lower courts. Professor, we're obviously moving towards the immunity case, but what have we learned about the Supreme Court in all the decisions so far? Social media, you also have the credit card fee swipe, you have the Chevron deference. There's a lot of stuff that we've learned. What was some of your takeaways?
Yeah, I mean, Alex, the big takeaway is that the federal government is a huge enterprise. And sort of the balance of power has shifted from Congress, congressional intent, oversight, to bureaucratic rulings and agency power. And that is true in the Republican side and the Democratic side. Both Republicans and Democrats have done this as presidents in their administrations. So now you've got sort of unaccountable bureaucrats who are given usually civil service life tenure to make decisions and interpret laws. The Supreme Court now has really reined that in and brought in the judicial branch. And that's the interesting thing. They have really empowered the judicial branch to get into these conversations about policy implementation. So it's elevating the judicial branch. It's not really elevating Congress. Sometimes they say, oh, defer to Congress. But really, it's trying to rein in what they see as a runaway executive branch that makes decisions without subsequent accountability. And that's what they've done in the last couple of weeks. And it's a very interesting situation to be in because it will create a lot more work for the federal judiciary in the next couple of years.
I guess the argument on the other side, Wendy, is that, hey, some of these agencies, they're the experts. They're the ones that should be interpreting the laws of Congress and applying them to industries. Why are we sending it back to a judge and who knows where, who doesn't really have any expertise on telecommunications or healthcare?
Well, in a perfect world, you could argue, yes, a lot of these people are longstanding experts and they have policy expertise. But we know ever since really Eisenhower, even since FDR, that presidents find ways to influence bureaucratic decision making. And there's layers of political appointees, and then there's sort of SES, quasi-political people. Trump wants to increase the number of political appointees vis-a-vis life career bureaucrats. So to say that it's all just, pure objective policymaking is probably not quite accurate. And I think we've seen tilts, we definitely have in the last 10 years, of interpretation of congressional law, whether you're a Democratic or Republican administration. And the court is saying, we have a voice here, we have a role to figure out what exactly is congressional intent and what exactly is overreach by the executive branch. At least that's their position now. It will be up to Congress, actually, to reassert itself here. That's the only solution. It's not a president that can do it. It's Congress that will be more specific when they write laws about how they should be implemented.
I look forward to seeing that happen. I'm a little sarcastic, obviously. Okay, so we are now drumbeating to the Trump immunity case. We just had two decisions out, so we could be getting this anytime. What do you think we're going to get, and what does it mean?
It's a really complicated question. I mean, there are real complications here. If a president issues an order, as Obama did, as Bush did, as Biden did, as Trump did, to order drone strikes to kill quote-unquote enemies of the state or terrorists, is that a war crime? I mean, do you get, can you be prosecuted for that later on? Can some family bring suit? We've had versions of that. That's a big question. If you use the office to enrich yourself or your family, that is clearly corruption and a crime, and the founders did not want presidents to be immune from that in office. They're quite clear. They write a lot about that. So how do you judge which actions should be immune from future prosecution and which actions shouldn't? The fact that the federal government did not charge Donald Trump with insurrection, I think, is a problem in their case. insurrection is something that you can be held accountable for federally in the Constitution. But they didn't charge him with insurrection. So that is going to be complicated. But I can tell you it will affect the election. I feel like independent voters may be very sour on Trump and Biden. But if they envision a Trump with no boundaries and no potential prosecutions for anything he does, I do think some of that momentum could shift back to Joe Biden, despite his lackluster, which is euphemistic, performance in his debate on Thursday.
Jack Smith, we haven't heard a whole lot from him. How do you think he's kind of viewing this situation here? Because he may, in a couple minutes' time, not have much of a case.
Right, and it's a bigger question for the country, is what kinds of protections do we want to give to the President of the United States, and is it so contingent on this particular set of candidates? Which is, J.D. Vance, who is auditioning for VP from Ohio, Senator Vance, said he believes that, you should have immunity, but not for Joe Biden. Well, that's not going to fly with most voters. So this is really a big question about accountability, and it's the court's responsibility to figure out what the founders meant by it. And it is not a simple answer. Jack Smith may be regretting not actually charging Trump with insurrection, which would have been more in the bounds of the federal government. And it goes to the question of the Justice Department under Merrick Garland. Progressive Democrats, other Democrats have been saying they haven't been as aggressive as they should be. So this will mean that they may have to go back to the drawing board. But really, thinking about 4 more years of Trump with no possibility of re-election,
all right, Wendy,
that's going to be something that affects the election.
Wendy, thank you so much. We have it coming across the tape right now. What do you have for us, Alex?
Supreme Court partially backs Trump on immunity. Literally, that headline just crossed, so we're going to be waiting, obviously, for all the intricacies of what that means. Supreme Court partially backing Trump on immunity. Interesting point. Wendy, are you still with us? Oh, okay. Wendy had to go. She had to run about 30 seconds ago. But Supreme Court partially backing Trump on immunity. Joe Matthew joins us from Bloomberg. Joe, I realize we're coming to you after like 30 seconds of this breaking. Do you have anything you can tell us on the ruling?
No, we're actually just trying to get this in front of our eyes here. They're posting this PDF as we speak here, guys, partially backing Trump on immunity, remembering that there are a couple of different things we're going to be looking for here, not necessarily an up or down, as we told you. Unlikely that the court would do that. We're having just an issue getting this link to work here. The former president's attorney, John Sauer, had argued, as a little background here, that presidents can only be criminally prosecuted if they have already been tried and convicted by the Senate. Impeachment, that's the mechanism to try a president for a crime. And this is where the whole SEAL Team 6 idea came up. Sauer was asked in the case of an immunity ruling, if the court were to support this, if it's not possible to criminally prosecute a president, that even directing SEAL Team 6 to kill a political opponent would be allowed. That is actually where the Trump legal team fell on this. So it's looking like this is going to be going back down to the lower court here, as we told you, which is awfully important to the future of this case, remembering that this was an appeals court that put together an exhaustive opinion here that many thought would not require the Supreme Court to weigh in. This is going to come down, it looks like now, to once again what qualifies as an official act of the president and versus a private act when it comes to
and I get
this
another
case,
Bloomberg,
and that could take some time.
Yeah, another red headline crossing the Bloomberg terminal. High court immunity ruling likely to further delay Trump trial. And I guess, Joe, from the former president's perspective, that's all probably he needs as it relates to this election coming up.
Well, that's true, because, if you forward the ball here a bit, and following Thursday night's debate, this might seem more plausible to some of our listeners and viewers. If Donald Trump is reelected, he then can immediately not only pardon himself, it's believed, if he decides to do that, but more importantly, defund the special counsel. He can take Jack Smith out of service and essentially end this case as we know it.
And just to point out, just if you're just joining us, the Supreme Court partially backs Trump on immunity. The High Court rules they're likely to further delay a Trump trial. The justices voted 6-3 in Trump immunity case. So it looks that this is right on party. I mean, I don't know who voted for what, but 6-3 seems to be the dividing line in terms of party as well, Joe.
I think that's exactly right, and not a big surprise there. This is exactly, guys, as We discussed it 15 minutes ago here, a partial ruling that comes down 6-3 that goes back to the lower court and therefore delays Jack Smith's trial likely indefinitely if we factor in the idea of re-election for Donald Trump. One question that we're going to have for a lot of people is, what is the possibility that a trial could take place between the election and the inauguration? Now, if you consider what happened on January 6th, this is a great concern for a lot of people. What if a president-elect were brought on trial on these charges after the American people had their say in the election? There is no one here and nothing to say that that will not happen, and it's among the possibilities we'll be exploring today.
Yikes.
All right, very good. Joe Matthew, thank you so much. We appreciate that. Joe Matthew, Balance of Power host, just with some of the earliest reporting of the Supreme Court case. Again, Supreme Court ruling here partially backs Trump on immunity, and the High Court immunity ruling likely to further delay a Trump trial. So we'll see how this plays out. We'll have more reporting coming up forward, but certainly a significant ruling here we've been expecting from the Supreme Court, and we got it today. So again, another piece of presumably good news for former President Donald Trump. Let's get some more analysis here. We bring on Harold Krent. He's a professor of law at Chicago Kent College of Law. Harold, we just had a few minutes to kind of look at this ruling. It seems like, I guess, a partial victory for former President Trump, but that may be all that he needs. Any early interpretation from you, Harold?
Yeah, I think that's right. I mean, the court split the baby in a sense by saying that there was going to be absolute immunity for some kind of presidential acts, those acts that fall within the court of his executive powers, and for other acts, it's presumptive immunity, which means that the lower court will have to go through the indictment and the trial and sort of separate out all the acts, so that some of the pro-election re-election acts, in terms of how Trump tried to position himself to get reelected, that presumably would fall and not be entitled to absolute immunity, but his discussions with the Attorney General would certainly qualify, and with the Vice President, would qualify for absolute immunity. So this will be a contextual analysis, but that means delay, it means time, and so there will be very likely no kind of trial until after the election.
When it goes back to the lower court, how does the lower court figure it out? What kind of guidance do they have to see, okay, this qualifies, this doesn't qualify? Where do they get that clarity?
It's going to be in the opinion. There's very little precedent on this, but the court's opinion is more detailed than we expected. And so the district court will have to thumb through and sort of get clues and hints. And the court did give a couple of examples in the opinion about what it considered to be worthy of absolute immunity and what it didn't. It's at first blush, obviously we all need to read it more carefully, but at first blush, it is a reasonable decision. The court tackled with it. Obviously, there still is a kind of 6-3 split, as we've seen in other contexts, but it's not absolute immunity. It's not a complete insulation of the president from the criminal process. It's not putting the president above the law. It's taking a measured step and trying to say which acts are actually incredibly important for the president not to have a fear of criminal penalty for, and which acts maybe have presumptive immunity for, but it can be found that if it's a personal act, re-election, personal vendetta, losing at a poker game, then he can be subject to the criminal sanction.
So, Harold, if, with the Supreme Court, I guess, presumably sending this immunity case back to the lower court, give us a sense of timing. How does this play out? When would we get more clarification on this? Because I guess that's really key as it relates to November 5th and then, into January for swearing in.
Yeah, I think that the lower court judge should be able to make a good faith stab at what acts for which President Trump should be absolutely immune and which not within 6 to 8 weeks. But that also will be subject to interlocutory appeal. And so the question is whether the D.C. Circuit then would want to stop any kind of trial momentum to consider the ambit of the immunity that the trial court finally decides on. So because of that potentiality, it's extremely rare, as I mentioned. I mean, it's extremely unlikely that this could ever be held for a trial before the election. But the immunity decision should be reached well before that. So to the extent that that's relevant, I'm not sure it is, but the lower court should be able to make the first stab at for which acts the president is immune and for which not, and therefore, obviously, that the criminal trial can proceed on those areas for which the president does not have an absolute immunity, such as possibly goading the protesters on January 6th, or maybe even for the fake elector scheme as well.
So if we just look forward to after November, if President Trump wins the White House again, can he give himself immunity from this case? Could President Biden, if he gets reelected?
Yeah, so President Trump would have two options if he's reelected. The first would be to pardon himself, which has been discussed, and we know that's never happened in history, but the Constitution is silent on it, so he might just try. The second is he could just order his Attorney General to drop the prosecution, and that's probably the more, I would advise him to do the latter because that's more tried and true, and so he does have that power, and he could just say, stop the wheels. Now, of course, President Trump would still be criminally possibly liable for the Georgia case, which is pending, and certainly this would have no effect on the New York case for which he will be sentenced in a couple of weeks.
So what do we expect to hear from the special prosecutor in this case? Do you expect to hear something today, or will they take days to kind of peruse and analyze this ruling?
Well, it's a PR issue, in terms of what they'll say. I mean, they'll, if I were advising Jack Smith, I might say that, the Supreme Court has struck the line of where immunity issue. We believe that most of our indictment can continue, and we will work to ensure as efficacious and speedy of a hearing on that issue before the district court, and we hope to continue the case that's been delayed for too long as quickly as possible.
Again, just to update everybody, the Supreme Court partially backs Trump on immunity, delaying the trial, saying that he has some immunity from criminal charges for trying to reverse the 2020 election results. But the trial probably then won't happen before the November election. The justices voted 6-3 along ideological lines, and they issued some guidelines as to what constitutes or not constitutes immunity to then push back to the lower courts. Professor, what have we learned then about the Supreme Court? What have we learned through this decision in terms of how it may impact an election?
Well, I mean, I think that this, pundits don't know whether the New York felony trial is going to affect the election at all. I've seen polls going both ways. And all we know now is that the centerpiece of the case against President Trump, the fake elector scheme and the insurrection on January 6th, that will not go to a jury. And to the extent that that would become critical in the election, who knows? But we're not going to see that played out before a jury, before the election.
Tell us about that lower court that this is now going to go back to, Professor. What do we know about that court and kind of how they interpret the law?
So this is the federal court in the D.C. District Court, and Judge Chutkan will be overseeing this case. And so this will not be a jury determination. This first cut will be her efforts to apply the guidance that the Supreme Court just handed down to determine what can go forward in terms of the essence of the special prosecutor's case against former President Trump. And so this can go relatively efficaciously. The issues have been argued before, but not under this specific framework that the Supreme Court has just delivered. So I would expect there to be a hearing before the judges. And there's no complication, as in the Florida documents case, about anything being under seal. The indictment's been handed down, and the parties can parse through the indictment and decide what has to go and what can stay and what the theories are, and there are complications. And so it's not a matter of simply taking a red pencil and marking things out, because so much is connected. I mean, the president's comments to the vice president in part reflects an official action of the presidency, but in part may reflect his effort to get reelected. So everything may have both the sort of the private and the official combined, and so the parties will be arguing which predominates and why. And so Judge Chutkan then has to take those arguments and make a determination ultimately about which part of the indictment can go forward.
In relation to the argument that presidents need total immunity because of stuff in office that they do, whether that's sort of dealing with the military, drone strikes, for example, does this clarify that part of it?
It does. I mean, I think that the argument that, I mean, obviously the listeners should remember that the Supreme Court earlier held that the president is absolutely immune from any kind of civil liability for drone strikes or anything else, on the theory that the president cannot be detracted from his or her efforts to be an effective presidency by the fear of a lawsuit afterwards. And so the court has held that for about 25 years now. And so this is actually in some ways saying that even though that we have civil liability, criminal liability can also be deterrence or disincentive from being an aggressive, efficient exercise of presidency. But nonetheless, the criminal law is so important that at times it has to exceed, or I should say trump, what the president otherwise would do. And again, if the president's acting in a personal, the easy answer, right, is if you're upset at a poker game and assault someone, there's no reason for the president to be immune from the criminal process. Or if there's an assault in the hallways of the White House, of course, there's no reason as well. But there's obviously many, many complicated scenarios that one could draw. The drone strikes, the president would be absolutely immune, both criminally and civilly, for those, as long as they're within the outer ambit of his official functions. But again, there's going to be hard line drawing cases to make about what constitutes an official act of the presidency and what is a sort of private or unofficial act. And that's what Judge Shushkin will have to face now in the coming weeks.
All right, very good. Harold, thank you so much for joining us. Howard Krent, professor of law at the Chicago-Kent College of Law, joining us from Chicago via Zoom. We want to back down to Washington, D.C. Joe Matthew joins us once again, co-host of Balance of Power. Joe, we've had a few minutes to kind of digest what's happening here. What's the feeling within the Beltway over the last several minutes with this ruling?
Well, I mean, to be honest, most people inside the Beltway haven't finished reading this yet. It's 119 pages long, but there are portions of this ruling that jump off the page, as the Chief Justice writes, as for a presidential's unofficial acts. This is a theme now this hour, right? As we get our heads around what they're really ruling on, there is no immunity. That's made clear here. Determining, he goes on to write, whether a former president is entitled to immunity from a particular prosecution requires applying the principles that are laid out here with regard to conduct at issue. Remember, we said that this may have to go back to the lower court to determine which acts are considered official and which are not. He writes, the first step is to distinguish as official from unofficial actions. No court has thus far considered how to draw that distinction in general or with respect to the conduct alleged in particular. So we have a lot to learn here. And these justices just took a long time. This has been waiting around for months, with a very important case in terms of Jack Smith's January 6th case on hold for all of this. And it's going to take a lot longer for the appeals court to get its head around this and do the work that the Supreme Court is asking. So the idea of a January 6th trial before the election is feeling pretty ridiculous at the moment.
All right, also joining us, Rick Davis, Bloomberg Politics contributor and partner at Stone Court Capital, standing by here with us. Hey, Rick, we see from Truth Social, President Trump tweeting, big win for our Constitution and democracy, proud to be an American. We're already sort of seeing the spin. Same question that Paul just asked. What's going to be the spin around this now?
Yeah, I think that this could go either way spin-wise. I mean, obviously, Donald Trump's going to lean in and say, look, it's obvious that I've got immunity, that they gave me this blanket coverage. And there's some implications within the early reading of the ruling that he can get away with that argument pretty well. No one's going to tell him no until it goes back to Judge Chutkin, and she opines on whether or not the case they have before them is the acts of a president or the acts of a private citizen. And so I would say, on the other hand, and I'm surprised the Democrats aren't out more forcefully right now going after this, but they've been very laissez-faire on their approach to all things legal when it comes to Donald Trump. But, I would certainly be looking at this as a positive from the Democratic point of view and saying, no, absolutely, he's going to be held accountable. And all indications were that these acts that were performed that are under indictment by the Justice Department were unofficial private citizen actions, and that they should be held accountable in a court of law.
Joe, have we heard from the prosecutor, Mr. Stone, about how he may, if there was like a split decision like it seems like we're getting today, that he would still pursue aggressively those which are not subject to immunity? Do we know where he stands?
In terms of Jack Smith?
Jack Smith, yes.
Counsel? No, I don't think he's been going there in public. He says very little. You know, that's kind of part of the job here. And he was, of course, holding forth that all of the 4 charges would see the light of day. We got the dissent from Justice Sotomayor, by the way, if you want to talk about the other side of this for a moment. She says the president is now a king above the law. Quote, let the president violate the law, let him exploit the trappings of his office for personal gain, let him use his official power for evil deeds, she writes, because if he knew that, he may one day face liability for breaking the law. He might not be as bold and fearless as we would like him to be. That is the majority's message today. Obviously, some real discontent here in another 6-3 ruling.
Yeah, no doubt. Yeah, I'm scrolling through as well. This is quite a long, 119 pages, as you were just mentioning. Hey, Rick, what would be the right way for the Republican Party to move on this? I mean, we know how Trump's going to go with this. You mentioned how the Democrats have been hesitant to embrace court rulings. But what's the right way for the GOP to move on this case?
Yeah, look, I think that Trump will do his victory lap today on his social media, and I think try to raise money from it, because he'll say, oh, these, Democrats in Washington are using the Justice Department to just try and keep me from being president. This is another example of that, backed up by the Supreme Court ruling. They knew I had immunity, and they did it anyway. And then I think what he'll try to convince voters of is that this ends his exposure to the Justice Department probe, that Jack Smith is on a wild goose chase, and that ultimately he'll be freed of charges. And I think, the reality is, unless until this case really starts to take fold, the time and the clock is running out on them. And Donald Trump, this is the big gamble for Donald Trump. If he's elected president, he just makes this case go away. He just calls whoever he appoints as attorney general and say, end it. And so it's all a gamble for Donald Trump on whether or not he can win the presidency. And of course, after that debate, he's feeling pretty good about it. So I think that right now, the Republicans are going to try and, 1, do a victory lap, and then 2, make the case that this is just a matter of legal fare, that the administration's coming after him, and that it's unfair.
So, Joe, is there any expectation that we'll hear from the Biden administration today, the Biden White House today, on the Supreme Court ruling?
Hard to tell if we'll hear from the White House or the campaign. I suspect we will, the latter. Whether the administration wants to weigh in on this, that might have to wait till a briefing with Karine Jean-Pierre. It's always unclear exactly what their posture is going to be on these types of things. But you better believe the campaign war room is cranking into high gear, and it was already running hot after that debate on Thursday night, and a lot of tough conversations and a lot of tough interviews over the weekend as they try to tamp down this whole conversation about finding a new candidate between now and the Democratic convention in August. As you make your way to the bottom of the Chief Justice's ruling, by the way, he really sums it all up. Looking at the balance of power here in Washington, the president's conduct, Congress may not criminalize the president's conduct in carrying out the responsibilities of the executive branch. He refers to the system of separated powers designed by the framers, demanding an energetic, independent executive. This is something that you might hear repeated. The president, therefore, may not be prosecuted for exercising his core constitutional powers, entitled at a minimum to a presumptive immunity from prosecution for all of his official acts. Remember, this applies to every president after this as well. The immunity applies equally, he writes, to all occupants of the Oval Office, regardless of politics, policy, or party. This is something that we have to remind ourselves is bigger than Donald Trump.
Yes, absolutely. And then if you're just joining us, the news of the morning, the U.S. Supreme Court ruling that Donald Trump has some immunity from criminal charges for trying to overturn the 2020 election results. The case goes back down to the lower court, and the justices voted 6-3 along ideological lines. The question really becomes, what actions does Trump or presidents take that are or are not protected with immunity? Rick, where does this then leave other cases that are against Trump in relation to immunity? I'm thinking specifically the Georgia case.
Yeah, the Georgia case is a little bit more complex because it's state law that's being adjudicated here. And so whether or not this presidential immunity extends to the state is going to be a similar question as to Jack Smith. In other words, if some of these acts are seen as private acts, you know, Donald Trump picking up the phone and trying to fish for votes with the state officials in Georgia, then that prosecution can go forward, and it isn't vulnerable to Donald Trump becoming president and unleashing his Justice Department on killing the case. This case would go forward even if Donald Trump was president. So my sense is that if Jack Smith finds that some of these charges, or if Judge Chutkan really finds that some of these charges are done in his private capacity, that will be a signal to the Georgia case that they can go forward with those same kind of charges, knowing that the feds have already decided that these are personal functions of Donald Trump and not the functions of the presidency.
All right, guys, thanks a lot. We really appreciate it. It's been quite a morning. Again, the U.S. Supreme Court ruling that Donald Trump has some immunity from criminal charges for trying to overturn the 2020 election results is going back now to the lower court. Rick Davis, Bloomberg political contributor and partner at Stone Court Capital. Also, Joe Matthew, co-anchor of Balance of Power. Both of you, thank you so very much. There is still a market that we want to keep you updated on here. I'm taking a look at the S&P, down by 0.1% of 1%. What's quite interesting is you just take a look at the bond market. You're definitely seeing a sell-off with yields in the back end quite higher. We did get that relatively disappointing ISM manufacturing data also out at the top of the hour. So let's get you a biz flash here with Lisa Mateo. Lisa?
Yeah, you mentioned where stocks are kind of struggling for direction at this point. Right now, the NASDAQ, little changed at 17,731. We have the Dow, little change as well, down 28 points, 39,091. We have the S&P 500 down about 0.1%, 9 points at 5,450. We'll head to the two-year yield, 4.78%. That's up 2 basis points, and the yield on the 10-year 4.48%, and that's up 8 basis points. Want to head over to online pet food retailer Chewy, erasing its gains. Shares were soaring early this morning, up about 10%. You had Keith Gill, aka Roaring Kitty, who disclosed a 6.6% stake in the company, but now we have those shares down about 4%. And then you also take a look at GameStop. It's another Roaring Kitty favorite, down about 9%. Some deal-making news this morning. Boeing agreed to buy back Spirit Aerosystems. It's an all-stock deal. Values the supplier at $4.7 billion. We have Boeing shares up 2%. Spirit Aerosystems up 2%. And BlackRock agreed to buy a private capital database provider Preqin for $3.2 billion in cash. And finally, UBS completed its merger with UBS Switzerland and Credit Suisse. Shares in Switzerland, they are down, up about 1%. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate it. Alex Steele, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. Again, the news of the day is clearly the U.S. Supreme Court ruled that Donald Trump has some immunity from criminal charges for trying to reverse the 2020 election results, all but ensuring that a trial won't happen before the November election. Let's get some more reporting on that. We go to Zoe Tillman, senior legal reporter for Bloomberg News. Zoe, what are we learning from this 119-page ruling?
I think the big picture of what we're learning is that we're not learning all that much, that the case is going back down to a district court judge in Washington to really go through the indictment piece by piece to determine, what in there is a core constitutional power of the president and entitled to immunity against prosecution, and what is unofficial or private conduct that he can still, that Donald Trump can still be prosecuted for. The court said, the majority said definitively that his communications with Justice Department officials after the 2020 election were definitely off the table. That they made clear. But everything else, is still up for litigation. That includes the conspiracy to put pro-Trump electors in battleground states to have them sign false certifications, other efforts to overturn the election. All of that is still potentially on the table, but it's going to take a while for that to get sorted out now.
Can you go through what we may or may not know about what constitutes official or unofficial actions?
Yeah, what they said is that, what the core constitutional functions of a president, of the office holder, and that includes his communications within the executive branch. And that's why, the majority said that talking with the Justice Department, with Justice Department officials about what they could or could not do on his behalf after the election, that was clearly within the parameters of a core constitutional function. But other types of communications, even the court said with his vice president at the time, Mike Pence, they didn't say definitely that all of those communications would fall within that kind of core constitutional power.
Right now, I also want to bring in Nick Ackerman, former Assistant Special Watergate Prosecutor. Nick, thanks so much for joining us here. I'd love to get, based upon all your years of experience, your takeaway from this Supreme Court ruling this morning.
Well, to me, I guess I get a little bit angry because there really is nothing here that is an official act. Even calls to the Justice Department. I have not read the opinion yet because I haven't had time. So many people have been asking me questions about it. But I need to read the opinion. But it seems to me that everything in there, including trying to get the Justice Department and putting in an attorney general who's going to come up with a phony document to send out to the battleground states saying that there was fraud in the election when there was not fraud in the election, doesn't seem to me to be within the official acts of the President of the United States or part of his constitutional duties. Everything that is in this indictment is alleged as something that is not part of his duties. It certainly isn't part of a president's duties to run for re-election. And moreover, it's not part of his duties to try and fix that election and try and maintain his ability to stay in power through false and fraudulent means, which is what this indictment alleges. What I find troubling about this whole thing is that it is so obvious as to the fact that what is alleged here are not official acts to begin with, that I don't think it should take Judge Chutkan, who is a district court judge overseeing this, more than a few minutes to determine that these are all official acts. Now, I haven't read the opinion, but is she supposed to have a hearing on this? All of this stuff, most of it we know already because we've heard it before the January 6th committee, and we know it's not official acts. So what they said is not really of any great moment because, of course, a president who is doing his official acts that are set forth in the Constitution, he can't be accused of a crime for doing that. But that's not what this indictment is about.
But so, Nick, it feels like then what you're saying is the distinction of what is official, AKA then protected by immunity, and what's unofficial, which is not, isn't clear at all. And I appreciate that you haven't read the opinion, but the going to a lower court and then them having to decide that based on guidance from the Supreme Court seems very complicated.
I don't think it's that complicated.
No, okay. But you have a different opinion than other people. So from that perspective, it does seem like it's complicated.
Well, I don't see how it's all complicated. The fact that you come up with phony electors, what's so complicated about that? The fact that you lie about the election, that you put in false documents before a federal district court judge in Georgia about there being fraud in the election. To me, none of that is very complicated. Of course, that's criminal. And it can be charged as criminal. They're not charging him. First of all, he had no business sticking his nose into anything in the Georgia process. It's not the job of a U.S. president to have anything to do with the presidential election or how that election is run. That is not within the purview of his official acts. And that goes for everything else he did in the other battleground states. So I don't quite understand what the Supreme Court could even conceive of as being an official act that's charged in this indictment.
Zoe, what do we expect to hear from the Biden White House, the Biden campaign, as it relates to this ruling?
So far, the White House has been quite careful when talking about this case. It's a pending criminal matter. Everything is alleged until a jury determines, whether he is guilty or not. And I think the president and the White House have been quite careful not to be seen as intruding on the process at all until it's, fully adjudicated. So, I would expect the same kind of caution and care in anything they might say about this decision and the next steps, because the court has really left so much unresolved. It's the Justice Department's policy generally to not comment publicly while a case is pending. So I don't think we're going to expect any kind of robust commentary, at least from official channels on this for now.
Nick, do you feel like if you were bringing this sort of case, this is an unfair question, but you were a special prosecutor for Watergate, right? Would you consider how it was delivered to the courts, this particular case? Was it framed in the correct way to get the right message across? Mentioning Georgia, I mean, the case had nothing to do with Georgia, so everything that we're talking about may be true, but with Georgia, that wasn't the case. It was specifically with 2020 and specifically in a January 6th issue. So do you think the case and not dealing with insurrection, for example, was a problem?
No, it's not just, the indictment is not just a January 6th issue. It's also an issue that relates to the entire effort to stop the peaceful transfer of power. It goes back to Georgia. It goes back to what he did in the battleground states. This is not just relating to January 6th. And the January 6th matter all relates to trying to undermine the peaceful transfer of power on January 6th and trying to get the vice president to basically take what are fraudulent electors and put those in place or send the vote back to the battleground states. I mean, this is all outside of what a president is supposed to do and outside of his absolute normal acts.
Zoe, what's the expectation here? Is there enough left outside of the immunity for the prosecutors to continue this case?
That's what they will certainly argue. You know, the court certainly left enough in the indictment up for debate before the district court judge. You know, I think it's worth noting that whatever Judge Chutkan in Washington decides after this next round of litigation could then potentially be appealed again and go back up to the appeals court process and potentially even reach the Supreme Court again before there's any kind of trial schedule. So that's why, you know, when we talk about this being a sort of tactical win for Donald Trump in the sense that it's very unlikely anything gets to trial before the election. You know, but the court sort of said, you know, even things like conversations between the president and the vice president might not be covered by immunity in the end, depending on what they were discussing, where it was really about the functions of the executive branch as opposed to, you know, the vice president's role in the congressional process where the president doesn't have any direct power to decide what should and should not happen. And then, you know, the state electors component of the indictment is, you know, up for debate, and Justice Barrett, in a concurring opinion, said that she thought she didn't see how immunity would apply there in terms of any role that the president plays in the state election process. So there is just still a lot in the indictment that remains unresolved, even as, you know, it is a positive opinion for Trump in terms of timing.
Mm-hmm. So if you're just joining us, this is what's happening. The U.S. Supreme Court ruled that Donald Trump has some immunity from criminal charges for trying to reverse the 2020 election results. The vote was 6-3. It now goes back to the lower court. And we're talking to Nick Ackerman, former assistant special Watergate prosecutor, and Zoe Tillman, senior legal reporter, are still with us. Nick, going back to the makeup of the court, is there a case that some justices could have recused themselves or should have?
Of course. I mean, there's two justices that obviously should have recused themselves. Justice Thomas and Justice Alito. Justice Alito made his, you know, opinion known about the January 6th insurrection by flying the flag upside down immediately after that insurrection, joining the insurrectionists. And Justice Thomas's wife was intricately involved in trying to push forward this situation so that Trump could stay in power. So, yeah, those two justices absolutely should have recused themselves. All I can say is this feels so much different than the Supreme Court in 1974, which was also comprised of justices that were appointed by Republican presidents who wound up in an 8-0 decision ordering Nixon to turn over his tapes. There was never any question about delaying the matter. The Supreme Court there, unlike the Supreme Court, bypassed the appellate court, the D.C. Circuit, and let this go directly to the Supreme Court. It was done in a matter of months. Everything was expedited. Here, this was dragged out as much as possible, even though the special counsel asked for immediate review to the Supreme Court. The Supreme Court sent it back to the D.C. Circuit to decide, then didn't really take this in an expedited manner, and then issued the opinion on the last day of their term. So to me, it smells a lot like what they were doing was purposely trying to delay matters for Donald Trump so he wouldn't have to have his day of reckoning in court prior to the election.
All right, Nick, thank you so much for joining us. Nick Ackerman, former Assistant Special Watergate prosecutor, and Zoe Tillman, legal reporter for Bloomberg News based in Washington, D.C. All right, let's get a reset here. We'll go to Mr. Charlie Pellet for a Bloomberg Business Flash.
Sweeney, here's what's going on. We do have stocks trading mix right now with the Dow, the S&P, they're both lower, NASDAQ higher. Do want to begin with the developing story, though. NVIDIA shares are lower, down 1.3%. French antitrust regulators are said to be preparing to charge NVIDIA over alleged anti-competitive practices. This according to Reuters, which cites sources. Again, NVIDIA shares down now by 1.4%. S&P 500 index struggling for direction as traders keep a close eye on any news regarding the presidential race while bracing for a deluge of economic data this week. We've got the S&P down 7 right now, down 0.1%. The Dow swinging between gains and losses. Little change right now, up by 1 point. 10-year yield 4.47%. The 2-year 4.79%. Gold, little change, down $1.50 the ounce now, $23.25, and crude, $82.30 a barrel, up 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. Alex Steele here, along with Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the news in business, economics, finance, and politics. So, of course, the latest is that the Supreme Court has given Trump partial immunity when it comes to trying to overturn the 2020 election. Want to get right to the Supreme Court here with Greg Storr, Supreme Court reporter, on this ruling. All right, Greg, what is the feeling? What's the reaction where you are? Walk us through the latest.
Well, even though Donald Trump didn't get everything he sought in this ruling, he certainly got enough. This is a very big ruling in his favor because it means that there's really no practical way a trial can happen before the election. What exactly is going to happen when the case goes back to the lower court, the extent to which this case is still viable in theory, we don't know that yet. But what's clear is that the idea that he could be tried and convicted before the election is a non-starter at this point.
Greg, a prior guest, Nick Ackerman, former Assistant Special Watergate prosecutor, really kind of calling out the court, I think, here for some politicization of their duties vis-a-vis kind of what we saw from the Supreme Court back in the Nixon investigation. What's your feeling about how this court ruled here in this case? What are some of your sources telling you?
Well, I'll leave the kind of the rightness or wrongness of the substance of this opinion to other folks. But in terms of the timing of this, there were certainly a couple paths the court could have taken to get this ruling out sooner. They could have the special counsel Jack Smith asked the court last December to take up the case on an ultra expedited basis. The court turned him down. They could have taken it then. They could have issued a quick ruling, and then maybe there would have been a trial before the election. They made a choice not to. They wanted to delve deeply into these constitutional issues. They wanted to let a federal appeals court decide the case first, and the practical impact is that it ends up being a huge victory for Donald Trump, even though they didn't go quite as far as he actually asked them to go. He asked them to throw out the indictment. They didn't go there.
So being a Supreme Court reporter and have been for quite a long time and kind of knowing how politicized in some ways it has become, at least the rhetoric around that, what's been your takeaway over the last week and a half of all the decisions that we've learned? Like, where does that set us up now?
Yeah, I mean, it is very noteworthy that this ruling, like several others that we got recently, were 6-3, ideologically divided. The 6 Republican appointees, including the 3 Trump appointees in the majority, and the 3 Democratic appointees in dissent. This is a a conservative supermajority. They didn't rule in every single case this term on the conservative side, but they did in an awful lot of them. And, it's really going to have sweeping impacts on the law in a lot of areas. Rulings that we got, including one today that's going to probably not get a whole lot of attention, having to do with administrative law, and a big ruling last week, are really going to curtail the administrative state and regulation. And of course, this ruling could have tremendous political impacts.
So as you mentioned, Jack, we've have had a number of 6-3 rulings along political lines. How normal, abnormal, unusual is that?
Certainly in recent years, it's not that unusual. We've come to be used to it. There was a time back before 2010 where you had a lot of justices crossing over, so to speak. Republican appointees who voted in a liberal direction in a lot of cases, and occasionally Democratic appointees who voted in a conservative way. We see an awful lot less of that now. The ideological divides on this court are also the partisan divides on this court, and that, coupled with the divisive, polarizing times that we're in politically, mean that we end up with a lot of these rulings where the Republican appointees are doing things that benefit the Republican Party and their interests.
To that point that you made about regulation, can we just kiss a lot of regulation goodbye? I mean, it just seems like if I add up all the cases on that, I mean, is that a safe takeaway for me?
I'm not sure I would kiss it goodbye in the sense that all this is going to have to be fought over in the courts. It's going to be case by case. There are going to be just a slew of lawsuits challenging regulations, both existing ones and ones going forward. So I'm not sure it's like cut and dried. I can point to that regulation is not going to survive, but it's pretty clear that there are a lot of regulations that won't survive, and even more of them that are going to be under fire and kind of under question and raising uncertainty.
Okay, so then to that point, let's pretend that Congress now issues super clear regulation or laws, and everything is super cut and dry, which I don't know if that's actually possible. How many of the laws that we're going to see passed are going to eventually just wind up in courts? Like, how do we govern in that case?
Yeah, well, a lot of them will. With regard to these Supreme Court rulings on the administrative state, most of those tend to be, or the focus of those are where Congress hasn't been clear. And if Congress had been clear in a particular law, then we wouldn't have the case that we're having. We're kind of dealing with what happens when regulators sort of try to fill in the gaps or do something without explicit authorization from Congress. Now, it's possible. There's a case that the court could say tomorrow that it's going to take up that would actually restrict Congress's power to delegate things to administrative agencies. But right now, a lot of these things, if you think they are problems, they are, at least in theory, problems that Congress could fix. The issue is more that Congress doesn't have the political will or the functionality at this point to enact a whole lot of clear legislation.
The mechanism, how this is going to move here for President Trump in this immunity case, where's it going to go, when's it going to go, and timing?
So it will get kicked back to the federal district judge who's overseeing the trial, Tanya Chutkan. That won't formally happen for a month or so. She has said that even before this ruling happened, that she's indicated she would allow a couple months, 2 or 3 months for each side to prepare for trial, and the trial could last 2 or 3 months. And now, on top of all that, she's going to have to dive into these allegations and decide, looking at the test the Supreme Court laid out, is this official or is this private, and therefore can stay in the indictment. And those decisions that she's making very likely will be appealable before there's even a trial. So we're talking about a much longer timeline than it had previously looked like we were going to have.
All right, Greg, we appreciate it. I know it's been an incredibly busy couple weeks for you, especially today. Greg Stohr, Bloomberg Supreme Court reporter, joining us on all the Supreme Court rulings and sort of the future of that there. There's a market that's also happening.
So I hear.
Looking at the S&P, doing nothing, Dow doing nothing, although the Dow was up like 222 points. So the fact that we're now down 4 is definitely something to write home about. And volume is picking up a little bit. The NASDAQ is still up by 0.3%, but watch NVIDIA, as we heard from Reuters, that perhaps regulators over in Europe are going to be looking into NVIDIA. And we see a bond market here that did have a sell-off, particularly over in Europe. And now we're still looking at the 10-year yield up by about 8 basis points after that weaker ISM.
Exactly. And even on the energy front here, we got some movement here. WTI crude oil is up about 1.25% here, $82.57 here. So we have moved higher in energy prices around the world. Gold up just slightly, but it's at $2,328 an ounce. And our good friends at Bitcoin up 1.6%, just below $63,000 per token. We had Eric Balchunas in here earlier, Bloomberg Intelligence ETF analyst, and he said he's actually seen still over the longer term huge flows into spot ETF, spot Bitcoin ETF. Although last week was not one of them. I saw some outflow there. So a little bit of stabilization there in terms of the flows into the ETFs for Bitcoin.
Also, I don't know if we're talking about how all of this is related to the U.S. election. Like, is the market movement because of the U.S. election? Like Morgan Stanley talked about how if Trump wins, you could see an acceleration of the steepening of the yield curve because you're going to have less growth and more inflation.
Yep.
But like, can we draw a straight line yet to this stuff? I don't know how that works.
Yeah, it doesn't feel like it. It seems like maybe we're a little bit early. Number one, number two, there's so much uncertainty out there. We don't even know. I mean, again, after the debate last Thursday night, there's a whole nother level of questions about kind of this election. Who actually is going to be the Democratic nominee? Again, President Biden coming out very strong in the last couple of days saying he is staying in the race. So we'll have to see how that plays out. Again, looking at the markets, kind of just a little bit of red and green, not much movement on the index level, but we'll keep an eye on it going forward. This was all Supreme Court this morning, fully covered. We'll have more coming up. This is Bloomberg.